Good evening, everyone.
Good
Welcome.
evening, sir.
Good evening, Bada. So today we'll be concluding our entire series of revisionary lectures. I'm sure parallelly you all have also kept yourself updated with all the revision topics that we have done. And I'm sure you all would now be in a very confident state of mind to handle the exams. Any specific, Neha, would you like to pinpoint as to any topic where you still find any difficulty, any doubts?
No, sir.
So, have you started your revisions, Beta?
Yes, sir.
Excellent. So, you are now able to recall and connect things.
Yes.
Okay, super. So, as
Yeah.
scheduled,
Sir, my one question is that in the module, there is a statutory laws given, and after that, there is an analysis, and after that, there is a flow chart. In the meanwhile, when we first revise whole, complete the syllabus, after that, in the second revision, what from where we should revise, from the charts or from the statutory updates or from the analysis. I have already made the notes on the book only itself, and sometime I put sticky notes somewhere so that it make easy to recall me whatever you taught me, or whatever I understand. But sometime it become difficult to how to start second time revision.
understood. See, now this is always a question by many students. Now, here I'll share my experience, though I believe that every student has his or her own mechanism. But this is my way of doing it for the second time and even the third time. So, if let us say in my first revision, I have done thoroughly, like as you said, you have even taken out your notes, you have your sticky notes, you have taken the short points, then my approach is like, let us say I start this chapter, for example, ITC. Now, first thing, since I'm revising, I've already done thoroughly in my first study. That is, whenever I did, my previous preparation was thorough. So now I need not go in a sequence of the chapter. Like when I start a subject, I have to go in the sequence so that that makes a link for me to understand the subject. But now when I'm revising, I need not go in a sequence. So what I do is I pick up the chapters in the sequence of their relevance in exams. Like I said, I will start from ITC. I will start from uh, more technical topics rather than going by the very first chapter. So point number one. Point number two is, in that topic, since I have selected it as an important topic, now what I prefer to do is, instead of again starting reading the chapter, first I will do is I will take up my own handwritten notes or my markings, whatever it may be. So if you have done some markings in the module itself, I take up the markings. If I have taken out notes like what you're saying, short notes, or you have put some sticky notes, I will do that. But that is provided if my notes are like a complete brief overview of the chapter, like for example, what is given towards the end in the form of let us recapitulate. If I have not done it in that fashion, I have only made markings of some relevant pointers or of some what do you say difficult pointers, but I have not made it a complete one. In that particular case, I will first go to let us recapitulate given at the back of the module, so that at least I will have a brush up of the whole chapter first. Once I have done brush up, now I will go to my notes, the pointers, the highlighters, which I have highlighted and marked as important or marked as difficult from that chapter. This is how my approach would be for the second time, for the third time. As far as statutory updates are concerned, now since I am doing it for the second and third time, I do it along with the statutory updates wherever applicable. So, for example, today we are going to cover the statutory updates, and after this, everything related to your September examination would be completed. So, in this particular case, you should now do that chapter by even marking this, like what we are going to study here. It is already given chapter wise, so you should mark this point in your respective chapters today itself, so that when you are now revising the chapter, that should be done with statutory updates. So step one, I'll do a overview either with my notes if they are point wise of the whole chapter. If not, then I will do it with our modules. Let us recapitulate. That is step one. Step two is After I've done that, I will go to my markings or my important highlights made in the chapter, which may be either for the important pointers or for the difficult pointers. This is what I will revise, and everything what I'm doing is with the statutory updates in place. Now, when I've done this for the second time, that is first my whole portion I completed thoroughly, then I did this revision. Now, when I'm going for the next revision, let us say you call it as your second revision. In that particular case, my approach is now I will first take the past exam question of that topic. Again, let us say I start with ITC. Now, before I start revising, I will first take up the past exam questions. I will run through the questions, the type of examples, the type of MCQs, the type of case studies that are there. And I will try to answer them there and there itself with whatever I recall. Now, what is important is when you studied the subject for the first time and now when you are revising for the first time, there is a lot of gap. So for the first revision, I will not recommend going to the paper or trying to answer it yourself. But between this first revision, which you will do now, as what I suggested, and the second revision, which you will do, which I'm now asking to go to past exam questions, there won't be much gap because now once revision starts, it is done in a loop of all subjects and the rotation comes faster. Now, in this particular case, let us say my revision of GST, the second revision after doing the first revision now, my second revision may come up in hardly 20-25 days gap, where I believe is not such a long period that you should forget things. So in my second revision, I will take up the past exam questions. I will take up the past exam MCQs or the case study type of questions, and I will try to answer them with whatever I recall, with this in mind, with that comfort in mind that it will be okay even if I'm not able to recall everything because it is still my second revision and I'm just trying to approach through the exam point of view. But this approach from exam point of view is very important in the second revision because thereafter your revision should not be in the flow of the chapter. It should be as per the requirement of the exam. So that ultimately, see, ultimate purpose of all this is to be culminated in the exam format. Hence, your second revision, your third revision has to be done with your past exam question, past MTPs, past exam RTPs, and then maybe your final revision can be with the latest RTP. So this is what I will recommend, and this applies to all the subjects, principally where subjects relating to direct tax, indirect tax, audit, etc. is applicable. Wherever subjects like FR or like your SFM is concerned, which is more of practical or solving, over there my revision approach is like my first revision would be I'll go through the whole chapter, all the formulae or the formats, and I will do few workings. This will be my first revision. Second revision is again I will take past exam questions. I will now try to solve the past exam questions to whatever extent I am able to do it. And third revision again in the same fashion. So my approach from the second revision should be more exam driven. This is what I want to bring out. Is this fine, Beta?
Yes, sir. Thank you.
Great. So please make a note of this, students, that your approach for revision after this first revision, because first revision is after a gap, you studied long back or you studied over a period of time. Now you have to consolidate everything in, let us say, 2 or 3 days, whatever is the revision time you have kept. So for this, I will not ask you to go to the exam questions directly. You can do with your module, with your markings. Even in our module, we have very good set of questions at the end. But your second, third revision should be more exam driven. In last class, we got some difficulty while reaching at FOB. At that place, rule 10.1 is applicable. Beta, can you give me example, Debrata? I am not able to recall this particular point. You may unmute and put across your point.
Hello, sir.
Yes, tell me.
Sir, on last class we have done some problems where
Yes.
expenditure in foreign land that will be excluded while reaching at maybe the problem number 18 or something like that.
Concluded that, no?
If something is excluded, while reaching at FOB.
Hmm.
Uh,
So I want to know what is the confusion now. What is your question now?
no, no, I am telling you, sir, that is because of application of Rule 10.
Uh,
Uh, that was some we have reached some difficulty while reaching while calculating the FOB, sir.
yeah, it is
FOB.
because we were discussing the point where on air freight there is a limit of 20%, right? Now you are given about some type of freight cost which is incurred by the foreign supplier in the foreign country. Let us say for bringing the goods from his factory to the airport. Correct.
Airport. And some
Now,
loading and unloading charges also.
correct. And obviously he will incur loading unloading also because he has to load it on the aircraft. So now the question is when we are applying the 20% limit, which is 20% of FOB,
Hmm.
whether this 20% limit will include the freight and handling charges incurred outside,
Hmm.
that is in his country, or will it only cover the freight and loading charges from his airport to our airport? That was the point of dispute.
Yes, sir.
Yeah, but then we concluded saying that we will go as per what is prescribed in our module, so that it is in parity with the thought process of the module. Because you understand at professional levels, especially at final level, there is a possibility that for a particular provision you may have 2 or 3 views at a time. It means those may be industry
Sir,
view, those may be litigative views.
same type of questions, maybe 10 times or more, this type of questions are asked in CA final.
Correct. That is why I'm saying. So that is why we should strictly follow what is given in our module. Correct?
In our model, right, sir?
Yes. That is the point. That is the point. Fine.
Sir, another question is while applying rule 7 or 7 and 8, it can be interchanged.
Yes.
Uh, who's who is the officer who can permit for this interchange?
Yeah. See, whenever you file bill of entry, that bill of entry is to be processed, is to be assessed, is to be checked by the department, right?
Yes, sir.
Now, we file all these bill of entries online generally because majority of our port are electronic port. Only few land ports are not electronic ports. Otherwise, all are electronic ports. So we file all bill of entries online, correct? Now, when it is filed online, the portal, the system allocates different bill of entries to the different officers who are sitting there in that particular office. So it may go to any particular officer who is your assessing officer, if I have to use this word, correct? Now that is the officer with whom you will make the request, ki, sir, I do not want to apply the deductive value. I want to first apply the computed value. So that is where you will make the application. It means you will make application to your assessment officer where the bill of entry is being processed.
He is the assessing officer, not the commissioner, assistant commissioner, or some commissioner,
If
or
you are
this
asking the designation,
yeah.
that's why I'm saying, see what happens in different custom ports. The function is assigned to different officers depending upon how many officers are there. See, there are some big ports, there are some small ports. Agreed?
Sir.
Now, in big ports, there are multiple officers at every designation. So, in big ports, what we have seen practically, I'm telling you what happens practically. In big ports, let us say there are many ACs and DCs, assistant commissioner, deputy commissioner, assigned for the role. In that case, the matter goes to ACDC, right? But when there are small ports, there would be very limited number of officers. In that case, even that matter may go to JC. Now, this is the first thing. Second thing is depending upon the quantum involved. If the quantum is in multiple 100 crores, then it will never go to ACDC. It goes to the higher ranking officer. Correct?
Sir.
I hope I answered your question. Yes, Swaminathan. Swaminathan, you raise your hand. Okay.
Sorry, good evening, sir. Sorry, I mistakenly raised it.
No problem, Swaminathan. That is fine. Okay. So let us start with our statutory update. We'll complete that, and in whatever time, if left, we will do the remaining place of supply provisions. Fine?
Sir, in FOB, always the sellers or vendor's margin is includable or not, sir?
100%, beta. See, understand one thing. FOB is the selling price. It is never the cost price. In fact, FOB is the price up to the seller's port. So it includes everything, entire seller's cost plus profit margin plus his transport cost up to his port. That is what is FOB. So it has to include profit of seller. Perfect?
Sir, sir, what at the applying this, what is the problem we faced in last class? For that, any rule we can form like that, that in foreign land, if something expenditure incurred towards handling charges or loading charges, then it should be inclusive of this airfare, na? That that will be that will be not taken into account to calculate FOB.
Fine. See, let us drop that point, beta, because if we are stuck up with one point, we will never be able to complete a subject. You will come across in different subjects such points where there is difference of opinion, difference of understanding, right? Let us keep it simple. For the purpose of exams, we have to finalize this, that whatever are the charges incurred in foreign country for my transportation, for my loading, unloading, has to be considered as part of that 20% limit. Simple.
Yes, sir.
Correct?
Yes, sir.
Perfect.
Perfect.
Now, let us go to statutory updates which are relevant to September exams. Now, these are some very important pointers, and you should expect to get at least 2 to 3 questions only relating to these updates. This can be your very confident and comfortable expectation. Now, what are these points? Just a minute. Now, what are these points? First, we start with the GST portion, which is part 1 of the statutory updates. Now, in GST portion, the first part that we are going to discuss is whether GST is applicable on the penalty charges, which is levied by some regulated entities. Now, the question is firstly, what are these regulated entities? First, let us understand this. Second, what are the penal charges of which we are talking about? Once these two things are clear, we can get to the answer. So, what we are discussing is that regulated entities, if they are imposing some penal charges on you, if they are levying some penal charges on you, whether on those penal charges you have to pay GST. So first question, who are these regulated entities? These regulated entities are like banks and NBFCs. Now, what is important is these banks, these NBFCs, which are regulated entities, have been instructed by RBI, which is their governing body, that they should stop charging penal interest. Now, what was this penal interest? If you default in your loan terms, you're not paying the installment on time. So definitely the banks were imposing us additional charge called as penal interest. Now, as per RBI, which is their governing body, it has been discontinued. Fine. Now, this is discontinued, that is okay. But what banks started doing, so since they asked to discontinue penal interest, they started levying another charge called as penal charges. So banks are very smart. RBI said, don't levy penal interest. They said, fine, we will stop penal interest. They impose another additional charge on us if somebody is defaulting in the payment of the loan installment in the form of penal charges. Now the question is, this penal charge which the bank is imposing, why? Because you have defaulted in any of your loan installment. Can it be leviable to GST? Now, under what criteria, under what classification they will levy? So they are saying under this category, tolerating of an act or situation. Now, we all know under Schedule 2 of the CGST Act, where classification of supply of goods, supply of services given, there is one entry which says that when you agree to an obligation, either to do something or not to do something, or to tolerate an act or situation, then that agreeing to any of these things will constitute a supply of service. And if somebody is paying you for you agreeing to any of these things, that will become the consideration. Now, the question is, when you are defaulting in making payment of your loan installment, whether bank is tolerating this act, and as a consideration for that, are you paying the penal charges? This is what is the question. For this, we already had an old circular. So before the current circular, what we are going to discuss, a reference is drawn to an old circular of October 2022, which specifically was dealing with different types of penal charges, which is also called as liquidated damages for breach of contract. Now, the question that was supposed to be answered in the previous circular was that whenever you breach any contract, so there was a contract between you and your supplier, there is a contract between you and your investor, there is a contract between two partners, any contract, you have certain roles, you have certain conditions. If any one of them breaches, we have studied right from our foundation days that the Contract Act itself provides for paying some penalty or liquidated damages. The question that was addressed in this circular was that whenever there is a penal charge or a liquidated damages for breach of contract, whether such breach of contract will be called as this toleration of an act, and if it is called as toleration of act, it will become liable to GST. For this, the previous circular itself clarified that this will not be considered as toleration of an act. So the previous circular, the 2022 circular, has already clarified that such type of liquidated damages, which let us say you do not honor your commitment and hence the other party has levied on you, is not for toleration of an act and it cannot be leviable to GST. Now, keeping this point in mind, the current circular clarifies the same thing. What it says that penal charges which are levied by the restricted entities like banks and all in compliance with RBI directions are essentially in the nature of charges for breach of contract only, and hence, as has been clarified earlier in the 2022 circular, whatever charges these regulated entities are levying will not be considered as a supply of any service of toleration, and hence no GST will be payable on such penal charges. So in short, the position for this penal charges will remain same with the provision for liquidated damages on breach of contract, because both are at the same footing. So both have the same tax treatment. So what is in short clarified in 22 circular has been repeated in the 2025 circular, but specifically with relation to this penal charges. Fine. Then comes another chapter. Now in this chapter, the amendment is basically in your RCM list. Now you all would have studied RCM list with effect from 16th of January 25. We have a new RCM, you can say, list with some amendments, with some additions. Now what are these changes? So first is with relation to sponsorship service. Now who is giving sponsorship service? So it is generally the event organizer. So if I am organizing a Dandiya event, in Dandiya event, there would be many businesses who would want to sponsor that event so that their business or their brand name gets highlighted. So many people would come and say that, okay, I want to sponsor your Dandiya event. Or like you have so many TV shows, you have so many nowadays web series, which are being co-sponsored by. Now you'll hear this particular tagline. Like, for example, if I have to give you example, many of these shows like Kapil Sharma show and all, when the Kapil Sharma show takes his name, the Kapil Sharma show, he adds the name of all the sponsors of that show. Now in this particular case, the producer of that show will be the person who's giving the sponsorship service. So these are examples of sponsorship service. Now earlier, when was RCM applicable? When this event organizer or this producer of this particular serial, etc., could be any person, and the person who is getting the sponsorship service, that is the business houses, should be either a body corporate or a partnership firm. So this was the condition. Now the amendment is that they have added this word in this entry. Now what is the impact of this entry or the amended entry? Now if let us say the event organizer who is here the supplier of sponsorship service, is himself a body corporate, which, like in case of all these production houses, they are generally body corporates, they are companies. So now if a body corporate is organizing an event or is running a show in which, let us say you are Tata, you are sponsoring my event or my show. So I am providing you the sponsorship service. Now, if I am a body corporate, that is, I myself am a company, then this service will now be under forward charge and I have to levy GST on. However, if I am either an individual, a partnership firm, or any such entity which is not a body corporate, and I am giving this service to a body corporate, that is to Tata company, in that case, the old rule will continue to apply. Tata company will still be paying the tax on sponsorship service under RC. So the point is, the supplier should not be a body corporate and the recipient should be either a body corporate or a partnership firm. Then the sponsorship is under RCM. Otherwise, the sponsorship will go under forward charge. So this amendment is important, and this example which I gave you, keep in mind this example. If you get any 2 or 3 marks case study question on this, it will be specifically this example, that the event organizer or the production company who is running that show is some private limited or a limited entity, that is a body corporate. In that particular case, now onwards, the tax would be levied under forward charge. Now comes the next part. The next part is, this is an old entry in which again there is an amendment. So now it is service by way of renting of immobile property other than residential house. So in short, what I am giving on rent is a commercial property, because it is saying immobile property other than residential dwelling. It means we are talking about commercial property. So when a commercial property is given on rent, then the tax is under forward charge if the supplier is a registered person. But if the supplier is an unregistered person and the recipient is a registered person, it is under reverse charge. Now this entry of reverse charge is there since 2022. However, what is the amendment? Or rather, first let us understand the impact of this so that you'll understand the amendment. So let us say I am a salaried person who out of the savings has purchased a shop, which is a commercial property, and I have given you the shop to run on rent. So I am charging rent to you. Now, since I am a salaried person and I am having no other source of income and my total turnover from this rent is below 20 lakhs, I am not liable to register under GST. So I have not taken a registration. So the supplier of this renting service is an unregistered person. Now you who is running or going to run your business are a registered entity. Now when you are a registered entity, the RCM provision under this entry would apply and you have to pay tax under RCM. Now in this, there was a question or there was a practical challenge that when you are running your shop, we all know that, let us say you are running a grocery shop for which up to 40 lakhs, since it is purely supply of goods, up to 40 lakhs, there is no need of registration, and up to 1.5 CR after that, you can take registration, but as a composition dealer. So now let us say you are a composition dealer. Now everybody knows that a composition dealer is not allowed to take ITC and he has to only pay tax on his entire outward supply at the rate of 1%, 5%, 6% as the case may be. In our case, it will be 1%. Now in this particular example, the point or the issue is that when I am an unregistered entity and you are a composition dealer and I was giving you the shop on rent, because of this original entry, before this amendment, because of the original entry, you were required to pay tax under RC. Now this was unnecessary, a burden on you, and that is why it was creating a lot of challenge, because composition dealers are generally small businesses. So to remove this particular challenge, they have amended the entry saying that the recipient should be a registered person, that is same, but not a composition dealer. So it means where the recipient of this renting service who is running a business is registered as a composition dealer, RCM will not apply. But where he is not registered as a composition dealer, but he is now a regular dealer, in that case only the RCM will apply. So in short, for application of RCM, there has to be the requirement of regular registered entity and not merely any registered entity. So if you are composition registered entity, RCM will not apply. That is the amount.
Sir, actually, this was very difficult earlier days, actually. In fact,
Correct. That is why this was
yeah.
brought to the notice of council, and they were kind enough to give this relaxation.
Yeah, they cannot claim input tax. Only the output tax 1% or 0.5% or 2%, the case may be, based on the situation. And
Correct.
now, yeah, they have to pay the RCM. Now the RCM only with respect to this alone is not applicable, sir.
Oh, yes. So it is only in respect of this renting service. If you're asking it that way, so correct. Only in respect of renting service, the RCM is not applicable.
See, in case of other things,
wherever in other cases RCM provision is applicable, it is still applicable. They have only removed it from here, not from other end.
Only this is only one exception for them, composition.
Yeah.
Okay, sir. Fine.
Perfect.
Perfect, sir.
Okay.
So, sir, composition dealer he will never pay any tax. The composition dealer never pay the GST.
Why? Composition dealer pays GST
at 1%. But in case of sale of the property or rent of the property, he will not pay.
Sorry. The composition dealer is always required to pay GST. I'm not getting your point.
The composition dealer will not pay GST or will pay GST at the time of rent.
At the time of rental, he will pay, na?
He will pay. He will pay to the registered dealer, and registered dealer will pay that.
No, beta. 1 second. Understand this. Are you a composition dealer? Yes.
Yes.
Correct? Now, when a person who is a registered person is giving his shop on rent to you,
then I will pay GST.
Anyways, he's charging on forward charge, na? So when he's charging on forward charge in his bill, he'll be adding 18%.
Okay, sir.
Correct, na?
He will pay. He will charge GST to me.
Yes, and he will recover it from you. See, ultimately, every time, whether it is forward or reverse, GST is always going out of the pocket of the recipient.
Okay.
Correct, na?
Previously, it was RCM. Now it is not RCM.
No, beta. Yes. So understand this. Previously, it was RCM, but it was RCM when any unregistered person was given to any registered person. Now also it is RCM, but it is RCM only when the registered person is a regular registered person. Are you getting this?
No, sir. Now you said that this is not RCM nowadays.
That is what I'm saying. See, whether the supplier is registered or unregistered, you tell me first.
The supplier is registered. And
supplier is registered, it is always under forward charge. There is no question of RCM.
What is the change bring down in this chart?
Sir?
Yes, please tell me.
So earlier, maybe the composite dealer has to deposit the RCM on the rent, and now the composite dealer is not liable to deposit the RCM if he taken the shop on rent from the unregistered person. This is the modification.
See, firstly, go step by step. First, whether the supplier is a registered person.
No.
Is supplier a registered person? No.
No, sir.
Correct?
He is an unregistered person.
Yes. Then we proceed further. Correct?
Yes.
Now, if the supplier is not a registered person, then now see whether the recipient is a registered person or an unregistered person. First possibility, recipient is also unregistered.
Yes, sir.
No GST.
Okay.
Supplier unregistered, recipient unregistered, no GST. Correct?
Yes.
Second possibility, supplier is unregistered, because see, once supplier is registered, it is always forward charge, all discussion is over, correct? So step by step, supplier registered, always forward charge, then you don't have to see who the recipient is, correct?
Yes, sir.
It is always forward charge, first possibility. Second possibility, supplier unregistered. Now check recipient. So where supplier is unregistered, then only you proceed to check recipient. If the supplier is registered, you don't check recipient. Recipient may be anyone, unregistered, composition, regular. In all cases, supplier charges on forward charge. Correct?
Correct.
Correct with all?
Yes, sir.
I am asking everybody who is having doubts on this.
Yes, sir. Yes, sir. Got it.
Second possibility, supplier is unregistered. Now you see who the recipient is. First possibility, recipient is also unregistered, no GST. Second possibility, recipient is registered, but registered as a composition dealer, again no GST as per this amendment. Third possibility, recipient is registered as a regular dealer, then GST payable by the recipient under RC.
So composite dealer, if it is registered, then RCM.
सर इसका मतलब ये होता है कि कंपोजिट डीलर पहले जो था उसको टैक्स का सिस्टम होता था, बट अभी क्या हो गया, जो रेगुलर डीलर है उसको आरसीएम डिपॉजिट करना है. अगर कंपोजिट डीलर है तो उसको जमा नहीं करना, उसको डिपॉजिट नहीं कराना आरसीएम.
करेक्ट. सो अगर कंपोजिशन डीलर है रेसिपिएंट, इट विल बी नो जीएसटी, बिकॉज सी फॉरवर्ड चार्ज में लगेगा नहीं क्योंकि मैं अनरजिस्टर्ड हूं. करेक्ट
जी. Because supplier is unregistered, there is no possibility of forward charge.
Assuming we are below 20 lakhs. See, if I am above 20 lakhs, then by default I have to register and pay tax. So when we are saying unregistered, we are also assuming I am outside GST, correct?
Yes, sir.
So I am unregistered, you are unregistered, no GST. I am unregistered, you are composition registered, again no GST as per the amendment.
Correct, sir.
I am unregistered, you are regular registered, GST under RC.
Yes.
Now I'll tell you what is the difference. Before this amendment, I am unregistered, you are composition registered or you are regular registered. For both cases, RCM was there. Now they have removed one case. Unregistered, composition registered, they have removed this scenario from RCM. So it is outside GST.
So that's what I am saying. Earlier, composite dealer has to deposit RCM, but after the amendment, the composite dealer does not have to deposit the
Correct.
RCM. The conclusion is that only.
Correct. Everybody else clear?
Yes, sir.
Any questions or doubts? Should I proceed?
Yes, sir.
Super.
Yes.
Great. So let us proceed then. Now, the next part. Now we come to an interesting scenario. What is this scenario? Let us understand. Now for this, let us connect 2-3 things, which if by chance you have forgotten, we'll try to connect again. You have to recall what is section 9.5 of the CGST Act. So 9.5 is the charging section. Now in the charging section, in the CGST Act, 9.5 is dealing with cases where ECO, that is electronic commerce operator, that is I will say any online portal, is asked to pay tax for certain notified services which are supplied through the portal. Simplest example is Ola, Uber. Now, Ola, Uber is a notified service which, when supplied through the Ola, Uber means, sorry, the passenger transport service is a notified service which, when supplied through this Ola Uber app, the 9.5 section of CGST Act says Ola Uber app, which is the ECO, is deemed to be the supplier of this notified service, and Ola Uber app has to discharge the GST of this particular service. Is this clear? Any questions with this first before I proceed?
No, sir.
Clear?
Sir,
Now
it
this is,
also include the goods transport company like the porter and all that, no?
see, you have to read the list of notified services. Now, notified services as on date is not covering GTA. It is only covering passenger transport.
But sir, porter is when you see the invoice of porter, it also include the GST while
Because
recovering from the customer.
that's why I'm saying, because porter is not a GTA. So don't call it as a goods transport. There is a difference between anything being a goods transport. So porter is not acting as a goods transport. First, be clear with this. Correct?
Okay, sir.
Yeah. So coming back to our point, now the example which is taken over here, so I'll take that example only so that whenever you are yourself reading it again, you'll understand. So I gave you example of passenger transport. The another service which is covered in 9.5 is the services which we book through the app called as Urban Clap. Have you all come across this app of Urban Clap, where you book sofa cleaning, where you
Yes,
book
sir. Yes.
drivers? All these different services are booked through the Ola, Uber, through the Urban Clap app. We call it as the housekeeping. Another service for which the example is covered here in this particular clarification is the restaurant service. Now, if I'm not wrong, I think from 1st of January 2023, if I'm not wrong, I may be missing the exact year, but it is from 1st January 2023, the restaurants who are themselves unregistered, but the food of these restaurants is being supplied through the Swiggy app, through the Zomato app, or any such app, the Swiggy Zomato, which is the ECO, is now required to pay GST on those services. Clear? Now, the issue is, now please pay attention, this is slightly tricky, but let us understand this. So, I am running this app, which is the Zomato app, the Swiggy app, correct? You all are different restaurants in the city. Now, Ashok ji is one of the customers who has downloaded my app. I'm, let us say, the Zomato app, and on my app you all are listed as the suppliers. Now he selects different food items from each of your apps. From some app he has selected rasgulla, from some app he has selected some chapati, from some app he has selected some pulao. So from everybody of your restaurant he has selected one item, but it is through my app, which is the Zomato app. Now 9.5 says if you all are unregistered restaurants, that is you all are small restaurants or you all are those cloud kitchen concept where you are not registered under GST, then I am required to discharge the GST liability of all this food which is being sold through my app. Fine, done. Now in this particular case, now if I'm talking about restaurant, if I'm not wrong, it is now even compulsory that whether the restaurant is registered or unregistered, I have to always discharge tax. Now, in the returns of ECO, there are now two types of supplies. One, because now this ECO has to pay tax on all these food articles. So one of the supplies which the ECO is showing in his GST returns is of the restaurant service, that is all this food, which ECO is now required to pay tax because of 9.5. Along with this, ECO is having one more outward supply, which is in fact the main service of ECO, which is the charges which the ECO is charging to the restaurant people and maybe at times even to Ashokji, that is the customer, which is for my platform usage. In fact, I'm running this platform and my main revenue or my main supply is allowing you both to use my platform. First to the restaurant runner, that is you all, for using my platform to get orders, and second is to Ashokji for making delivery to his house. In this particular case, when I'm running this app, my main supply is of my charges, my fees for usage of my platform by both of you. Now, For my charges, my fees, anyways, I have to pay tax as per 9(1) because over there I am only the main supplier. But at the same time, because of 9(5), my returns will also show one more outward supply, that is of the restaurant. Correct? Now the question is, once you have understood the scenario, we'll go to the issue and then the answer given in the circular. Now the question is, or the issue is, when in my returns I am showing two outward supplies, one is restaurant. You all would be knowing that restaurant services are liable at 5% without ITC. So effectively, my returns are showing two types of services. One of restaurant, where I'm charging 5%, for which technically there is no ITC. Second is of this platform charges, where I'm charging 18%, and for it there is ITC. Now, since one of my supplies is restaurant for which there is no ITC, I fall in section 17.2, 17.3 of the CGST Act, which says that where the law says that on any outward supply there is no ITC, then you have to also do proportionate reversal of your common ITC. So in running my business, I may be having many inward supplies or input tax credits which are common for my entire business. Now the question arose whether I, that is the ECO, who is paying tax under 9(5), is liable to reverse proportionate ITC on all my inputs and input service, because one of my outward supplies which is taxable under 9(5), which is restaurant, on which I have to pay 5%, on which there is no ITC. This question is what is put in this particular thing, in this particular circular. But again, before the circular answers, we go back to an old circular. What it says? It was clarified by an old circular of 21, which said that ECO shall not be required to reverse ITC on account of restaurant service on which he pays tax under 9(5). It has been clarified that ITC will not be allowed to be utilized for payment of liability under 9(5). In short, whatever is my 9(5) liability, that is in this example, the restaurant service for which now I am required to pay tax under 9(5), I will not get ITC. That is clear, because for restaurant there is no ITC. Second, whatever is this output tax on restaurant, I have to compulsorily pay it in cash, that is without utilizing any credit ledger. So neither I can take any ITC for this service, nor I can utilize otherwise available ITC against this 9(5) output liability. In short, this 9(5) output liability I should pay in cash. This principle also applies to supplies made in respect of other services which are notified under 9(5). So restaurant is only an example. This rule applies for even other services, like I gave you example Ola Uber service or this urban cab service. Whatever services I am giving through my 9(5) category, for all this rule applies. Now, it is clarified that who is liable to, if it is clarified that ECO who is liable to pay tax under 9(5) on notified service is not required to reverse ITC on his input services proportionately under 17.1, 17.2 to the extent of supplies made under 9(5). So what is this circular saying now? Circular is saying that even though what was clarified earlier, that since my outward supply is 9(5) item, which is restaurant, which is this, where tax rate is 5%, for which ITC is not allowed, so I cannot take ITC, fine. Second clarification in the old circular was that output tax I have to pay in cash, that is also fine. That continues even today. But the question is, I have two supplies. One is this 9(5) for which no ITC, and one is my regular service of my ECO platform usage for which 18%. So I have ITC. So effectively I have two supplies, one without ITC, one with ITC. So what should I do of common ITCs? Because common ITC 17.1, 72 says if you have these two type of supplies, it should be proportionately reversed. But what is clarified in this circular is, and which I believe is very logically correct, is that the point is that since 9(5) is not my supply, that is why the challenge is that 9(5) does not require reversal of common ITC, because I am not paying tax on my service. I am paying tax of services of some other person only done through me because of 9(5) provision. Is this clear to all?
No, sir.
See, firstly, is this clear that I have two types of outward supplies?
Yes, sir.
Which one is your service, one is my service. Is this clear first?
Yes,
One
sir.
is of hotel and one is of platform fees.
One is of portal and one is of?
Platform fees.
No, so portal is platform, na? So that is the first service.
It is a first service. On that 18% GST is charged.
Correct.
And another person's service, that is hotel, for that 5% GST will be charged.
Which is not my service, which is your service, but I have to pay tax as per 9(5). Correct?
Another one service. Okay.
Correct?
Okay, sir.
Is this clear? Now, wherever the tax rate is 5% with the condition that no ITC is available, so in those cases, the rule also requires that I cannot take full ITC of common services or common ITCs. In that, I should do proportionate reversal. This is also a requirement. Correct? Correct? Because my 5% is coming with a condition that without ITC. Now, if my 5% is coming with a condition without ITC, then the law says even for common services, I cannot avail ITC.
Correct, sir.
Correct? Now the challenge is that whether that rule will apply to me also. So if I have some common ITC, should I also do proportionate reversal? The answer is no. Because it is not my ITC. It is, it is not my service where I am paying tax of 5%. Are you getting this? Students.
सर इसका मतलब ये हुआ कि अगर रेस्टोरेंट से प्लेटफॉर्म के थ्रू किसी ने ऑर्डर प्लेस किया और रेस्टोरेंट से खाना मंगाकर हमने वो उसको फॉरवर्ड आगे कर दिया, तो जो रेस्टोरेंट चार्ज कर रहा है 5%, वही हमने कस्टमर से कलेक्ट करके डिपॉजिट करा दिया है.
वो तो वैसे ही करना है, आपने कस्टमर से लिया और वही पूरा कैश लेजर में डिपॉजिट कर दिया,
एज इट इज डिपॉजिट हो गया. और जो दूसरा पार्ट था वो था प्लेटफॉर्म फी, जो कि हम रेस्टोरेंट ऑनर से चार्ज कर रहे होंगे या फिर कस्टमर से, जो भी
या दोनों से
तो उसके ऊपर 18% हम चार्ज करेंगे और उसके लिए जो भी हम इनपुट लेंगे उसका इनपुट क्रेडिट हमें अवेलेबल होगा.
यहाँ पे भी प्रॉब्लम नहीं है. प्रॉब्लम किधर है? मेरे पास कॉमन इनपुट भी तो होता है ना, जिसका रूल 42-43 रिवर्सल करवाता है.
जी सर, वो जो पॉइंट है ना, वो क्लियर नहीं हो रहा है मुझे. ये 2 पॉइंट्स तो क्लियर हो गए.
हाँ, तो अभी वही तो, अरे पर अभी तो अपन बात कर रहे हैं वही. क्या नहीं क्लियर हो रहा बोलो ना मेरे को. सी, मेरे पास इनफैक्ट मेरे पास बहुत सारा आईटीसी कॉमन है. पहली बात, कॉमन आईटीसी समझ रहा है?
यस सर, यस.
वो समझा क्या?
Sir, give an example.
Yeah.
Give an example. My bill is around 2,000 rupees on Zomato.
Yes.
Then what will be the tax? How to give that? On 2,000 food bill, I have to pay 18% GST.
On 2,000 food bill, no beta. See, on the food bill, there are two components. One is for the food, where there is 5% GST.
Okay, on 2,000, there is 5% GST.
Yes, on the food component, it is 5%. Right.
On platform fees, there is 18%.
Yes. There is no question on the billing part. The point is, in my books, I have ITC.
Okay.
Now, ITC would be of three categories. One, ITC applicable to restaurant, which is actually not there because there is no ITC applicable to restaurant, because restaurant I have not created or given. It is your service. I am just booking it from my portal. So technically, there is no ITC which I have for restaurant, right? I hope you are getting this. I am not buying and selling restaurant. I am directly restaurant. Everything was done by you. You are having your restaurant set up. Only whatever food you supplied through my app, I am required to pay tax. So technically, I have no input service no ITC relating to restaurant service. Correct? I hope this is clear to everyone also. Neha.
Yes, sir. Yes, sir. Yes, sir.
Yes,
For
sir.
restaurant service, I have no ITC because the restaurant is technically not my service. It is your service.
Yes.
आप अपने
Yes,
घर में
sir.
खाना बना रहे हो, अपने होटल में खाना बना रहे हो, तो खर्चा सब आप कर रहे हो.
Yes, sir.
सिर्फ वो बिल मेरे नाम से बन रहा है, यानी मेरे नाम पे वो बिल दिखा रहा हूँ, बट आई डोंट हैव एनी ITC ऑफ दिस. इज दिस क्लियर?
Yes, sir.
Perfect.
Yes, sir.
Now, second is I have ITC for my service of platform. क्योंकि वो मेरा
Yes.
मेन सर्विस है तो उसके लिए मैं खर्चा भी कर रहा हूँ, so I have some ITC for that. And then third, for running the overall business, like I'll give you the simplest example of common ITC. The simplest example of common ITC is my rent of my place, because the place in which I am running my business, right?
Yes,
That
sir.
is the place which is used for the entire business,
Yes,
correct?
sir.
So it is my common ITC. You understood this?
Yes, sir. Sir, I need only the one example of the common service so that
So
it will
common
clear.
service is my rent.
Okay, okay, sir. Now it's clear, sir.
ठीक है? Clear
Yes,
with
sir.
everyone? Everybody, is this clear now?
Yes, sir. Clear, sir.
Anybody, any doubts? Anybody, any doubts? All clear?
Yes, sir.
Super. So what is given is ECO will be required to pay the full tax liability on account of supplies of 9(1) in cash. This is coming from the old circular, that is only through electronic cash ledger. The credit availed by him in relation to inputs and input service used to facilitate such supplies cannot be used for discharge of such 9(5) service, because for 9(5) you have to pay tax under using cash ledger only. Most important, and the main important part is you don't have to do any proportionate reversal under 17(1) and 2. This is the clarification given by the present circular, that you don't have to do any reversal under 17(1), 72, even though you are making or supplying this type of a service. Is this clear?
Yes, sir.
Sir.
Now is it clear to all?
So all the taxes on platform fees has to be paid by cash ledger.
Yes. No, not platform fee. The RCM.
RCM?
Sorry.
Not
Only
not
the 5% tax.
9(5), 9(5) restaurant. Sorry, not RCM.
restaurant.
Hmm.
Now we can use the ITC against the services of 18%, and we cannot use the ITC and pay by cash the restaurant services tax. That is 5%.
No, sir. Sir, the ECO will facilitate us only the platform, so he will take platform fees.
See, you have two outward supplies in your invoice. So your invoice is showing two supplies. One is restaurant, one is platform. Is this clear?
Yes, sir, clear.
Correct? No
Yes.
doubts with this?
No.
On restaurant, you are paying 5%. On platform, you are paying 18%. This is clear?
Yes, sir.
No doubts with this also?
No.
Now the main point, we are not having any problem on our outward side. Our entire problem is on our inward side. Is this clear? Because on our inward side, whatever expenses we incur, we pay GST on those expenses for which we take ITC, correct? Yes, correct or not?
Sir, Zomato will pay GST. He will not utilize the credit ledger
Correct, for paying the restaurant tax,
for
restaurant
paying
service tax. That is clear.
the-
All this is old circular, correct? Correct, na?
Correct, sir.
There is no problem, no doubt up to here. The question that came up why this circular is given is that in my books, in the Zomato's books, there are some common ITCs. Like I gave example of renting service. Rent is used for the entire business, so it is a common expense. You understand the meaning of common expense? Common means
Yes, sir.
used for everything in my business, right? It is not being used only for one thing in my business. It is used for entire business. So it is common expense of my business, correct?
Okay, sir.
Now, whatever ITC I am having on rent, this is the ITC which will be called as common ITC. Correct?
Yes, it is common ITC if it is paid towards rent.
Correct?
Correct,
No
sir.
doubt now.
No doubt, sir.
Sorry. Now the main point. If this is common ITC, then comes the main point, whether I need to do proportionate reversal of this common ITC, because I have two sales in my P&L, or not in P&L, in my returns I have two supplies, rent, restaurant, and the platform. So the clarification is I am not required to do reversal of my common ITC on proportionate basis as per 17.1, 17.2. This is what is the point.
Not reversal of a common ITC. We have
Common
to pay.
ITC.
We have to
Not required to
utilize.
reverse.
We have to utilize the cash ledger only.
For Zomato paying tax on restaurant service.
Restaurant service. It
Correct.
will utilize the correct. It will utilize the cash ledger only.
Correct. So from cash ledger only you will be paying that. Okay? That is clear. For your platform fees, you can utilize cash, credit both. Clear. And the point is, you will not be required to do any reversal of common ITC. That is what is the point.
Okay, sir. On my food bill was 2,000. 5% is 100 rupees, and this is paid by cash only. Zomato will take cash from myself, and it will deposit in cash ledger and pay by utilizing cash ledger.
Correct.
And
Correct.
Zomato will also charge platform fees on which 18% GST will be charged, and it will be also given by cash ledger.
See, that may be you given means that may be paid using cash ledger or credit ledger. Both is allowed for that 18%.
Okay. Yes, sir.
So in simple words, we can say that the whole ITC we can use for paying the 18% tax for the
Perfect.
platform fee, and the 5% of the restaurant fee against that ITC is not available. We have to pay that in cash only.
Perfect.
The final conclusion is that, no?
Perfect. You can say so, but it is not so simple, because when anybody will ask you from this point of view whether 17.1 is applicable, 17.2 is applicable, at that time you should understand. So this way it is simple.
Yes, sir.
Correct?
Yes, sir. Thank you.
So that is what is clarified. That is what is clarified. Now, moving to another very sensitive issue. Now, this issue is again very specific. What is this? Whether DDA, Delhi Development Authority, is a local authority. Now, firstly, why this question comes? See, there are many local bodies. I will not use the word local authority because that is what is the question to be answered. There are many local bodies which are said to be government managed, government run, government owned, etc., or even government created. Like the simplest example is Delhi Development Authority. So within every city, every state, you have multiple bodies like the Zilla Parishad. Now Zilla Parishad, we all will understand or look upon it as a government body only. Similarly, you have this PWD, Public Welfare Department. Everybody will look upon it as a government body only. Now the question is whether these bodies will be considered as local authority under the GST law. Now, why this question has come, let us first understand that this question has come exclusively from two points of view. One is from the exemption notification, the other is from the RCM notification. Here they have basically answered from the point of view of RCM. Now, firstly, what is the challenge? Why we are discussing this? Because in exemption notification also, in few cases where you are doing some service, which is the statutory function of a local authority, it will be exempt. 2, RCM entry also says that where any service which you are taking from a local authority, which is a taxable service, which is not an exempt service, which is taxable. But if you are taking it from government or local authority, they will not pay tax. You will pay tax under RC. So the basic point is why this discussion is relevant or requires a circular, because whether DDA is a local authority, if the answer is yes, maybe certain of its services will become exempt because of the exemption entry, and remaining of its services which are not exempt will come under RCM, where the businessman who is purchasing or taking these services from DDA will be required to pay tax under the RCM. So both these points, exemption and RCM, are linked to one point, whether DDA is a local authority. Now, for this, to understand this, the circular very beautifully first tries to elaborate what is a local authority under GST law. So under GST law, section 2 bracket 69 has defined local authority to mean, first is a municipal committee, then a Zilla Parishad, then a district board, or any other authority. Now this any other creates a problem. See, first three will never create a problem because the names are very specific. The problem is for this any other authority, but it has clarified which any other authority which is legally entitled to or entrusted by the central government, state government with this. Now this is the most important point: control or management of municipal or local fund. So whatever is the local fund or the municipal fund, if that body is given the power, is appointed by the government to control that fund. Control means what? To decide what is to be done of the fund. Means that body will take decision that out of 100 crores of municipal fund, I will spend on road, I will spend on sanitation, I will spend on cleanliness, I will spend on street lights. So if that body itself can take a decision about the fund, then that body, by whatever name called, you can give any name to that body, will be a local authority. But if that body is not given this particular power, though you have appointed that body, government has appointed that body, but that body is not having the control over the funds. So funds decision is taken by some other person or by the government. This body is only appointed to look after whether funds are properly utilized or not. That's it. But they have no control over the funds. They have no decision power over the funds. Every decision is taken by them. They have to just keep a watch that whether the funds are properly utilized, whether the work is properly done. If that is their role, then they are not a local authority. So further what the circular says, it means the authority which is similar to an elected self-governing body. This is again the second criteria. So one is the fund criteria, who is having the control over the fund. Second, who is having a self-governing body, that is like a board, like a committee, which is elected. It means through election, the body members who will be controlling that body are nominated, and which is entrusted with the control management of the fund. So where the members are elected, the body members, the committee members, and which is having the authority over the fund, will be a local authority. Now, once you understand the requirement of becoming a local authority, now check the constitution of DDA. This is available on the internet, also on the DDA website. So Delhi Development Authority website, you go in About Us, you will get all the details. How DDA functions, whether it is appointed by some government or it is elected, whether they are having control over funds or not. Now, in this particular case, when you see this Delhi Development Authority's constitution, you will find that it does not meet the requirement of local authority because of the non-satisfaction of the conditions which are given above, especially the condition relating to control and management of fund. So hence, this circular clarifies that since DDA is not satisfying the above conditions requirements given for becoming a local authority, hence DDA will not be considered as a local authority.
Sir, is it applicable only for DDA or other development authorities like Mumbai or Pune?
See,
In every
understand one thing. This has to be answered by checking each and every person's details. Correct?
development authority. Okay. Also, there are in Mumbai or Pune or Chennai.
That is, see, every state will have different policy, different rule, correct?
Uh,
So that you have to check by going through the website of each and every person,
hmm.
correct?
So in the
So,
circular, only DDA is excluded.
because for DDA, there was, see, how circulars are issued. We go to the council with our query. कि भाई we want clarification on this, or council gets to know from their department. The department itself goes to the council saying कि there is lot of issue or confusion relating to this, you clarify.
Okay. When a development authority is sanctioning or planning to do a bus stand somewhere or something like that, then it will be not treated as a local authority. Reverse charge will not be applicable for that.
Perfect. So neither exemption nor reverse charge. Wherever any provision which requires the authority being a local authority, all those provisions will not apply.
Okay.
Correct? Understood?
Yes. Yes, sir.
Any questions or doubts further? Students will just take a 5 minutes break and will restart, right? 5 minutes break.
Okay, sir.
break time. I got stuck up with one call. Yes. We basic understanding of 2-3 provisions, combining them to reach the clarification which is given. Now it is relating to place of supply of online services and the condition or the example to understand this, and I'll tell you why this clarification was required. So actually clarification is one line, but the way the clarification is brought about to subscribe to Prime. Now all these are online service providers. We specifically call them OIDR, OIDR, Online Information Database Access Retrieval Services, OIDR services. Now, when we talk about these OIDR, there are other examples like you subscribe to some online newspapers, you subscribe to so many online journals, online, like we subscribe to different platforms from where we get updates. So these are all examples of online service. Registered recipient. So this circular, this clarification does not apply to us, but many people do apply over there and who are not yet registered. But giving you another common example, you have music app, or like YouTube Music has a paid subscription, so you apply for that. Now many people are applying for this Chat GPT. So all these will come under this. The recipient is registered. This challenge is not arising because where the recipient is registered, I give my GST number, place of supply is simple. It is my GST number, location. But where I am unregistered, since I am not registered with GST, the biggest challenge is what is my location? That is what is the biggest challenge. Now, for this, let us first understand the first important provision. The first important provision is relating to place of supply, which is under section 12. Now under section 12.3 to 12.14, you have specific place of supplies for specific service place of supplies, whereas 12.2 is the generic place of supply. What does 12.2 says? Where you are not covered in 3 to 14, then 12.2 applies. Now this 12.2 says the place of supply would be the location of the recipient. Now the recipient, if it is unregistered, then how you will come to know the location? So they say as per the records. But where there is nothing on record, then the place of supply is the supplier's location only. Now this is where this whole circular is revolving around. So now we are dealing with unregistered recipient. Had it been registered, there would be no problem because my address is always available, or you just put my GST number, everything is available. But where I am unregistered, like anybody subscribing to all these online apps, the online app person is least bothered. If you're not having GST number key, where do you belong to? He is simply concerned with from where he is getting the money. Now in this particular case, if you see 12.2, what will be the place of supply? So they say if your address is available on record, then your address. When we go to section 31.2 of the CGST Act, so 12.2 which is for place of supplies of IGST Act, now we go to 31.2 which is of the CGST Act. What it deals with? It deals with the provision relating to invoicing. So what it says that wherever a record should be there in your invoice, right? And then it says, however, the government may on recommendation by notification specify the category of service in respect of which tax invoice shall be issued within such time in such manner as may be prescribed, and subject to some other conditions, the invoice may not be issued. So all these things are there which are not important for us. Then important is rule 46, which is again dealing with invoice. So first is rule 31, which simply says that a supplier of taxable service shall issue invoice which should contain some description, some details. Now, what are these description details? Some of it is given in section 31 itself, like it says tax payable, etc. But majority things are given in rule. So we come to rule. In rule 46F, which is particularly of our interest, it says what should be given? The name, the address of the recipient, and the address of delivery, along with the name of state and the state code if the recipient is unregistered. So particularly for an unregistered recipient, the rule under clause F says that for an unregistered recipient, you have to compulsorily mention on the invoice the name of the state and the state code. Correct? Now, what is of importance is this proviso. Supply of online money gaming, or in cases where any taxable service is supplied by or through e-commerce operator or by OIDER, that is online information database access or retrieval services. So the proviso is specifically again dealing with what we are interested in. So where any of these services are being provided, again to who, so value may be 100 also, you have to compulsorily maintain on your tax invoice, you means the registered person who is issuing this invoice, you should compulsorily mention what the name of the state of the recipient. And what is very important is they say this shall be deemed to be the address on record. Now, why this point is relevant? Now come back to Rule 12(2), which says that what will be place of supply, except those which are covered in 3 to 14, except the specific ones for generic ones. The place of supply is the location of recipient where the address exists on the record. And then reading it with now the current Rule 46F and the proviso, it says that in case of these services, the tax invoice which is issued by the provider of service, that is supplier, should contain, that is, it is a compulsion, it should contain the name of the state of the recipient, and this name of the state will be deemed to be the address on record. So it is exactly for fulfilling the requirement of 12B. Now, once you understand it like this, now you see what the circular clarifies. Now it is going to be makhan to understand. So what was the question? Firstly, why the circular is issued? The circular is issued to clarify this particular case, that where I am supplying something online and my recipient is unregistered. In this case, what will be place of supply? How it will be determined? So what is the final clarification in respect of following cases of suppliers who is supplying to whom unregistered recipient, and the supplier are mandatorily required to record the name of the state. Now we know where this is compulsory. It is compulsory in these three cases: supply of online digital service, OIDER, and online money gaming. So for all this, it is now compulsory that even if you are supplying to an unregistered person, and irrespective of the value, you are compulsorily required to mention the name of the state, and this will be deemed to be the location of the recipient. In short, the place of supply will be the state of the recipient always. This is the conclusion. And how it will be the location of the recipient always? Because of Rule 46F and the proviso, you have to compulsorily mention the state name, and secondly, this state name shall be deemed to be the address. So even if you don't write the whole address, it is fine. Even the state name is deemed to be the address. So that is how the conclusion of all this discussion and the circular is, that the state of the recipient has to be mentioned compulsorily, and second, this state will be deemed to be the address on record, and thirdly, once this address on record exists, then as per 12(2)(b, this address becomes the place of supply. That is, the recipient state is the place of supply. So this is how this circular, aligning with three different provisions, gives you the conclusion. I hope this is clear to all. Fine. Now some amendments in exemption notification, I did not find any significant. These are more of clarificatory. So as we know that earlier our state electricity boards were there. Now these boards have been converted into companies. Now earlier the state electricity board were doing everything. They were generating electricity also, they were transmitting also, they were distributing also. Now since the time they have been made companies, there is a separate company for generation, there is a separate company for transmission, there is a separate company for distribution. Now, everywhere they are using this cautiously. They are always saying generation or distribution or transmission. However, in this exemption entry, it was by mistake written as transmission and distribution. So, after 8 years of GST, they realized that, okay, this is a mistake. So they have now corrected it by putting the word or, because now all these electricity supply companies have been bifurcated into three categories. Generation is a separate company, distribution is a separate, and transmission is further separate. Then again, the exemption which is given in entry 69, which is given for services provided by different entities. In this list, they have added one more entity, that is training partner, who is approved by National Skill Development Corporation. So one is the National Skill Development Corporation itself, and second is the training partner. Now, what is this? I'll tell you. So now our government is focusing on the skill development. So it is now you are having a special portal where you can go and check what are the various skill development programs run by the government. Now, in this skill development program, these are the bodies which are set up by the government to run these programs. But practically, these are again government bodies. They themselves cannot come and give training. So what they do is they partner with private persons like us. So let us say I am an expert of this subject of GST, and GST is one of the approved courses on this government's portal relating to skill development. So in this particular case, what these bodies which are formed by the government or approved by the government will do, they will partner with us. Now the issue was that you have given exemption to the service given by the National Skill Development Corporation, but it itself is not giving service. Actual service is given by me. So what was happening? Their service was exempt, but their service is not the main service. Main service provider is me. So whatever was my fees for giving the service, that was unnecessarily taxed. So it was not giving the actual benefit, because I am actually the service provider who is a private entity who has partnered with the National Skill Development Corporation. So majorly I am charging the fees, and my fees are taxable, then it is of no use. So now, realizing this issue, they have added my name, that is a training partner. Obviously, I have to be registered with National Skill Development Corporation, etc., etc. But once I am there with NSDL in the NSDC, sorry, then I become the approved training partner, and whatever fees I am charging for these skill development courses, that is also exempt. Similar to this, another clarificatory amendment I would say is service of insurance provided by Motor Vehicle Accident Fund. Now, what is this? Now, you all know that there is something called as a third party insurance. Now, in relation to this third party, which is a compulsion because of this Motor Vehicle Act, you have to compulsorily take an insurance. And many times people, for saving their premium, instead of taking normal insurance on their life, they take a third party insurance. Now, in this particular case, internally, when you take this third party insurance, the actual contribution is made by the insurers out of your premium. But what they do, these insurers get your insurance reinsured from the Motor Vehicle Accident Fund. So these insurance companies, they don't take your risk, though you have taken out the policy with them through any of these online policy apps like Policy Bazaar. You go and you take these third party insurance. So the name of the company may be anything, but they effectively get it from this Motor Vehicle Accident Fund. So effectively, again, who is actually insuring you? It is the Motor Accident Fund. So they have now exempted the service of insurance which is provided by this Motor Vehicle Accident Fund, because actually they are the one who are insuring you. And for the purpose of this exemption, they have added the definition of insurer. So the insurer definition will include the same meaning as it is given to it in the Insurance Act, that is all these persons. Next. The next issue is clarification in respect of applicability of GST on facility management services provided to municipal corporation. Now see, this is in line with the previous amendment. The previous amendment was very specific that whether Delhi Development Authority is a municipal corporation or a local authority or not, and the answer over there was no. Now, over there itself, if you remember, I had mentioned that why that issue was there, though that issue was only answered for DDA, but you'll have to check for every state's development authority. The two conditions are given. If both the conditions are satisfied, it will be a local authority. Otherwise, it will not be a local authority. Now, at that time only I had said that why this question arises, because there are two important notifications which are linked with local authority. One is the exemption, one is the RCM. That clarification was relating to RCM. This clarification is relating to exemption. Now, What is this exemption wala point? Let us see the entry first, the exemption entry. This exemption entry is entry 3A of the exemption notification, which provides exemption to composite supply of goods and service with a condition that in this composite supply, the goods portion should not exceed 25% of the total value of this composite supply. So where you are supplying some goods or service, which is a composite supply, and in that the goods portion is not more than 25% of the total value of composite supply provided to government or local authority. See again. So where these services are provided to government. Now see, providing to government is not a challenge because identifying who is government is many times not a big challenge, but many times identifying whether this body is a local authority or not is a challenge, and that is why that clarification of DDA was given. Now here, when I am giving service to a local authority and my service is a composite supply in which goods is less than 25%, then this exemption is applicable, that the service is exempt. Now, in this relation to this, the issue is not about whether you're a local authority or not. So you are giving service to municipal corporation, it is a local authority, it is municipal corporation, right? There is no doubt in this. What is the issue is that what type of service, let us say there is some contract floated by MCD. I got the contract because I filed a tender and I was given the contract. What is the contract? The contract is for some housekeeping service. The contract is for repair, civil maintenance, some painting is required, some tiles are broken that has to be repaired, this type of service, or maybe furniture maintenance, or maybe maintaining their gardens and all. So all these services MCD regularly avails, and we as private service providers, we fill in the tender, we get the tender, and we provide these services. Now, these services are basically intended for maintaining the MCD office in a working condition. So all types of repairs, housekeeping, everything is for keeping the MCD office in a running condition. Now the query is, or the issue for which the clarification given is, when I am providing a housekeeping service, obviously my major service is all service, hardly goods component is there. So definitely I satisfy the criteria of this exemption entry 3A, where the goods component is less than 25%. So that is satisfied. Now the question or the challenge is whether my services given to these MCDs, that is all these local authorities, will fit in this exemption entry of serial number 3A. Now for this, we satisfy the first leg of this exemption entry, that is what I am giving is composite supply of goods service in which goods portion is not more than 25% and I am giving it to government or local authority. I am satisfying this. But what is further required is that when I'm supplying these services to government or local authority, what is very important is the services should be by way of any such activity which is a function, and this function is given in the constitution. What type of function? Either the function which is of panchayat under 243G, or it is a function of a municipality under 243W. It means as a private service provider, the service which I am providing to government is actually the service which the constitution has made liable to the panchayat or to the municipality. Means what? I'll give you the simplest of example. So all our cities have this Ghanta Gadi concept where this van comes every day morning and it collects the garbage of your house. So we call it as Ghanta Gadi. In fact, the name itself given by a government in our place is Ghanta Gadi Prakalpa, means Ghanta Gadi project. Now, what is this function which this municipality is doing through this? It is performing one of its most important function, that is cleanliness. So municipality is entrusted by the Constitution of India in Article 2. These are the responsibility of municipality. One of them is maintaining cleanliness. Now, how does municipality do it? Municipality, one, can either run its own ghanta gadis and get the sewerage collected from everybody's house, but municipality is itself not doing that. What municipality does, it outsources the work to some private vendor of the municipal limits of that city. Let us say they will require 1,000 ghanta gadis with around per ghanta gadi 4 people, one driver and 3 laborer, to collect the garbage and take it and dump it at the dumping yard. This is what is the work for which I file the tender to municipality, which municipality is giving to the citizens. So actually these services are the service to be done by municipality for the citizens. But that has been exemption entry where I am doing a composite supply of service and goods, where goods is hardly 25%, and I am of the municipality given to it by the Constitution of India under Article 243W. So this is actually purely covered in exemption. In fact, the question is for which this clarification is to be is required and which we have to understand is when municipality outsource further these conditions, these functions, horticulture, all these are for keeping the municipal office in good condition. Whether when these private vendors give these services to the municipality for maintenance, housekeeping, whether that would qualify for exemption under entry 3A. The clarification says is applicable. Why so? Because maintaining the MCD of by the Constitution was keeping the city clean. That is what is the function given by Constitution to minister of housekeeping, security guard, maintenance. But that is not the list of service covered in the Constitution Article 243W. So very precisely the circular clarifies that it is not eligible for exemption. Students, any questions or doubts?
Clear, sir.
No doubts?
No, sir.
Super. So let us proceed. Now we go to the other clarification, which is again, see, all these clarifications are very interesting. Once you understand the background of it, why they are issued for exemption entry, like how we took a clarification for this entry 3A, there is another exemption entry 34. Now let us first understand what this exemption entry is dealing with. So whenever you go to a mall, you swipe your card for making payment. What happens is that shopkeeper, where now what this bank is doing, this bank. So this bank or acquiring bank. So what is the role of this acquiring bank? The role of this acquiring bank is to acquire. Bank is doing what? It is simply taking the money from my bank and depositing it in your bank account. This is the role of an acquirer bank. Now, what does entry 34 says? That whenever you are doing a transaction, that is you are swiping, and the amount of the transaction is not exceeding 2000, then whatever are the charges, because there is some 1%, 2% charges, that is exempt from GST. So if the settlement amount, I will use the word bill amount, that is the amount which you are swiping, is not exceeding 2000, then whatever are the charges which the banks would levy for all these services, that will be exempt from GST. Fine. Now this is the exemption entry. What is the issue for which this circular is required? Now when you are doing it through a swipe machine, no doubt for this you have a straightforward exemption entry. The issue is that where such type of a payment is routed through a payment aggregator. What is this payment aggregator? So for this, let us take a simple example. I am trying to book a ticket on IRCTC website. Now, when I go to IRCTC website, I select the train, I book, select the compartment, the journey, everything. And when I book the ticket, it asks me to pay. But for payment, how do I transfer payment from my bank to IRCTC bank? So for that, there is some midway person who is called as this payment aggregator. Now, when I try to pay or I try to book this ticket, it takes me to another web page, which is the web page for doing payment. We call it as the payment gateway. Now, there are different service provider, like the most common one is Razor Pay, Paytm, even all these Amazon Pay. So all these are now providing this service of acting as the payment gateways or the payment aggregators. Now let us say this same point. I booked a ticket on IRCTC website where let us say the ticket value is below 2000. Now definitely for this, there would be some charges for doing all this. Now where there are charges, whether this exemption entry of key charges is up to 2000, then there should be no GST, whether it will apply whenever I am using this payment gateways, which is called as payment aggregator. What is the clarification given? They say that payment aggregators are those entities which facilitates e-commerce sites and merchant to accept various payment instruments from their customers without the need for the e-commerce sites or the merchant to create a separate payment integration system of their own. So first possibility is all these IRCTC etc. should have their own payment mechanism, which is many times difficult because they have to then take permission of RBI and do so many processes, and then only they can have their own payment system. Instead of that, they take services of some payment gateways. Like I gave you example. So they may take services of Paytm. Paytm is the most common payment gateway. The name itself is Paytm, right? The jingle says Paytm Karo. So it is basically a payment gateway. Now, when I'm using this Paytm payment gateway to make payment, in this particular case, there would be some charges. Whether those charges are liable to GST or not, for that, we already have an exemption entry. The question is whether this exemption entry of one settlement up to 2000 will apply. So the answer is all these payment aggregators receive payment from customers in escrow account and are obligated to do the final settlement with the merchant within the time specified by the RBI. Therefore, the RBI regulated payment aggregator, this is the most important point, not all. Those who are RBI regulated payment aggregators and who are involved in settlement process of making payment are covered in the second part of the definition of acquiring bank. So acquiring bank's definition we saw in that the first part is all these people and the second part says any other person who makes the payment to any person who accepts such card. So where these payment gateways are RBI regulated payment gateways, they will fit in the definition of acquiring bank, and acquiring bank means a bank, financial institution, including NBFCs, and this part, any other person. So they say if these are RBI regulated, they will fall in this any other person. And once they fall, then this exemption entry, which says that services given by these acquiring bank, in our case, the payment aggregators, where the settlement amount is up to 2000 will be exempt from GST. Perfect, students? Understood? So very beautifully, they have given the pictorial example of this. Clear to all?
Yes,
Any
sir.
doubt?
Sir, in case of insurance, now it is exempted, the third party insurance is exempted.
No, sir. It is not that third-party insurance is exempted. In third-party insurance, the insurance service given by the motor vehicle fund only that is exempt. The third-party insurance is not exempt.
What is the difference, sir?
See, there is a difference. See, there are so many types of insurance products, right? All insurance products are not exempt. In fact, if you remember, even in the previous GST Council meeting, which concluded only with the popcorn clarification, there was one of the major points because one of the central ministers, Mr. Gadkari ji, had requested the government to give insurance exemption at least to small insurance policies so that a common man who nowadays takes all types of insurance, life, health, etc., should get the exemption. Correct?
Okay, sir.
Now that same point will be under consideration in this council meeting, which is about to happen in next 2 weeks. So the point is, all insurance policies are not under exemption. Only there is a list given, which mainly covers this Atal Pension Yojana and some specified schemes. In that, they have covered that motor vehicle insurance, where the insurance is done by the motor vehicle that fund. So where firstly you are getting it done from a private insurer, that is not exempt. That is what is being clarified. Is this clear?
Yes, sir. Clear, sir.
Should we proceed?
Yes, sir.
Great. Now we move on to the next part. Now this next part is again interesting. What is this next part saying? Clarifications on various issues pertaining to GST treatment of vouchers. Now, firstly, what are these vouchers? Let us understand. So, let us say I want to gift Ashok ji on his birthday, but I don't know what he will like. So, if my budget is rupees 2000, what I do is I go to West Side Mall, I pay them 2000 and they give me a voucher, a printed document which is written gift voucher, whatever. Generally, it is called as gift voucher. I pay them 2000, they give me this voucher. Now, I give this to Ashok ji saying that, Ki Ashok ji, whatever you like, you can buy using this voucher. Now, whenever Ashok ji goes to West Side, he does shopping, and let us say his invoice or his bill for his shopping is 2700. What he will do, he will give the voucher which is of 2000 and he will give 700 rupees. His bill is settled. So basically, what are these vouchers? These vouchers are something in the nature of a payment instrument. So tomorrow when you want to pay someone the amount, the payment, how you will pay? You will give cash or you will pay them online. You will give them check. So you will use one of these banking channels or you will use cash. Parallel to that is this another mechanism which is called as voucher, where first you get these vouchers from the respective entities, and then using these vouchers, you can make your payment at different places. This is what is voucher. Now, there is lot of dispute, discussion, confusion as to whether voucher itself is liable to GST. Means what? In my example, see there are two steps. First, I go to West Side, I pay 2000 and take the voucher, which I give to Ashok ji. Second step is Ashok ji goes to West Side, buys the goods, whatever he wants. He may buy some trouser, he may buy some jeans, he may buy some footwear, and from his total bill, he pays only 700 because 2000 is already paid by me, for which Ashok ji is presenting the voucher. So the question is, in the second leg, when Ashok ji is buying those goods, there is no doubt there is GST on those goods. But in the first leg, when I paid 2000 and got the voucher of 2000, the question was, is there a supply there in the first leg where I paid a consideration of 2000 and what I got in return is the voucher. So there was a big question on whether voucher is taxable per se. So for this, all the clarifications, all these disputes have happened, and now we are having a super circular on this. What does this circular says? See, already we have a definition of voucher in the GST law itself. It itself says voucher is in the nature of payment instrument which creates an obligation on the supplier to accept it as a consideration. So what is voucher? It is a payment instrument. Like instead of giving cash or card, you are giving voucher. And the supplier is under an obligation to take it as a consideration. So supplier has to accept that 2000 as a payment against his supply of goods or service. That is what is a voucher. Now, the issuance of this payment instrument, which is the voucher, including the prepaid instruments, is regulated by RBI as per the Payment and Settlement Act. So obviously these vouchers are not any casual documents. These are having some RBI mandate and regulations. Now, prepaid instruments as defined by RBI. So now they have also given what is their definition. So basically our voucher satisfies this definition of prepaid instrument. Now coming to the issues. So firstly, what is the conclusion on combined reading of the definition of voucher as per this section of CGST Act, along with the definition of money of the CGST Act and the description of the prepaid instruments under the RBI, the following observed. What is observed? First case A, where the voucher is covered as a prepaid instrument recognized by RBI and is used as a consideration to settle an obligation. That is my example, where you are using voucher as a prepaid instrument to settle your consideration. In such cases, voucher will be considered as money. So it is like money only. Instead of I giving cash, I'm giving voucher. So voucher in this first case, that is where it is recognized by RBI, where my voucher is recognized is by RBI, it is acting as money. And once it is money, there is no GST on that. Second, where the voucher is not recognized by RBI. So let us say I'm issuing some private vouchers which are not as per RBI mandate, and that is legal. It is not illegal. So it is not recognized by RBI. In this case, voucher cannot be called as money because it is not recognized by RBI. But still in this case, it will become something else, which is an actionable claim. And again under GST, except for the specified actionable claim, which is today having some 7 items, except those 7 items, no other actionable claim is taxable. And in that list of specified actionable claim, voucher is not there. In short, even if it is not an approved voucher of RBI, still it will not be liable to GST, because now in this case, it will take the color of actionable claim, which is not in GST. So in whatever case, whether approved by RBI, not approved by RBI, there is no GST on the voucher. So in my first leg of the transaction where I gave 2000 and I took the voucher from west side, there is no GST on that voucher. Yes, in the second leg, when Ashok ji will buy something from west side, then on entire 2700, that is the value of goods which he has purchased, there will be GST. How he is making the payment of 2700? One is giving the voucher, the other is giving 700 rupees in money form. Fine, that will be leviable to GST. Now, the next part. Whether a transaction in vouchers fall under the category of supply of goods or service. So now first clarification. Once we have understood the two types of vouchers and its effect, now the answer for each of these issues is clear. So since vouchers, if approved by RBI, is money, if not approved by RBI is actionable claim, and both are outside GST, hence the answer for first one is the transaction in voucher themselves cannot be considered either as goods or as service, because in one case it is money, which is not good service. In other case, it is actionable claim, which is again outside GST because of Schedule 3. So in any case, it is not considered as supply of goods or supply of service, so it is outside GST. Second question, what would be the GST treatment of transaction in vouchers by distributor, sub-distributors, agent? Now this is interesting. Now what is this? Many times the vouchers may not be given directly from west side to me. So there is a person who is issuing voucher. The voucher is circulated through distributor, sub-distributor, and then it is coming to me. So it is like people are in the business of buying and selling vouchers. So a person who has created the voucher of 1000 rupees, he will give the voucher to the distributor at rupees 900. Distributor will give to the sub-distributor at rupees 940. And sub-distributor will be giving to me at rupees 1000. So each one is keeping its margin, and what are they doing effectively is they are buying and then selling the voucher. Now the question is, when somebody is in the business of dealing in vouchers, mind my words, somebody is in the business of dealing in vouchers, whereby they are buying the voucher, adding the margin and selling it. So what they are getting is some profit margin on the sale of vouchers. In that particular case, what is the GST treatment? So where they are getting profit margin, over here they are calling it as trading margin. So from the first originator till the end consumer, in between there could be 2-3 stages, and every stage there is some profit margin earned. Since voucher are neither goods nor service, hence pure trading of voucher will also not be liable to GST, because what you are buying and selling is voucher and there is no GST on voucher. It is like buying and selling liquor. Now since there is no GST on liquor, so whoever is buying and then further selling liquor by adding the margin, they don't have to pay any GST. Similarly, when you are buying and selling the voucher, you don't have to pay any GST. So buying, selling of voucher is outside GST. Fine. What would be the second possibility? Second possibility is that the person who is issuing voucher has to issue it to me only. He is not giving it to distributor, sub distributor, and then it is coming to me. It has to come to me only. But because I cannot directly connect with that person, so there are again intermediaries. You can again call them as distributors, sub distributors, but they are now working on commission basis. So since they are providing a service to the originator, that is, they are helping the originator to make the voucher available to me. So effectively, they are not buying and selling the voucher. They are only providing some middleman service, some agent service to the first person so that the voucher can reach to me. And for giving this service, they are charging their agency commission. So when it is on commission basis that they are helping the originator to provide the voucher to the end consumer, and this is on commission basis, the nature of service is different. Now the service is not dealing in voucher. The service is making the vouchers available. And for this service, there is GST because now you are not dealing in voucher. Your nature of supply is different. You are providing a business auxiliary service of helping them make their item available to me. So now when you are acting as an agent, then whatever is your commission or fee, it will be liable to GST. So GST would be payable. So please understand, trading of vouchers, no GST, because voucher is neither goods nor service. But helping them to make the vouchers available to the end user, GST is applicable.
Sir, example is book publications like Taxman, they are giving some vouchers to their agent,
Okay.
publication houses.
Okay. So
So where the GST will be applicable?
see what vouchers they are doing, giving. Can you give me an example?
They come to a they come to a large bookstore of any town, and the agent will come, and agents also comes to the professional firms also. They are in a they come to sell something or some books or articles, something like that, and they are also providing us some discounts. Are the vouchers?
No, 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 no. See, discounts are not vouchers because there and there itself it is over, na? 600 rupee book they gave you for 500. That's it. They gave you discount of 100.
Hmm.
Can you use that 100 later on for some other payment? No, na.
Something
That is
happens. Something happens like that when we go to the Reliance retail store, and there are some vouchers in our card.
what is voucher, na. That is what is voucher. So we are talking about that voucher only.
Oh, that is the voucher.
Yes. Correct. So you have something, some credit points or something in your wallet or something, which you
Yes.
can redeem next time. So whenever you are making purchases next time, they will adjust this credit points. That is what is the voucher we are talking about. Correct.
Maybe. Yes.
Third question in relation to this is what would be the GST treatment of additional service such as advertisement, co-branding, marketing, promotion, etc., etc. Now see, there is no doubt with this. This has nothing to do with voucher. So any other service will be liable to GST. Third, what would be the GST treatment of unredeemed voucher? Now this is again, or this was a burning issue. So let me give you an example. I got the voucher from Westside for Ashokji of rupees 2000. Now this voucher, many times you'll find it says valid up to. Now the voucher is saying valid up to 31st of July 2025. Okay. Now I gave this voucher today, but somehow Ashokji forgot and the date of 31st July was over. Now in this case, what will happen? If Ashok ji goes to West Side on, let us say, 5th of August, taking that voucher, West Side will say, sorry, your validity is over. Now the question is, what will happen of such unredeemed voucher? Unredeemed means which are not encashed, which are not utilized, and most important, the validity is over. This is what they say is called as breakage in the commercial terms. So in commercial terms, this is called as breakage. Now, please understand the transaction. What happened? I had purchased this voucher initially by paying 2000. So 2000 is already with Westside, for which Westside gave voucher, which was supposed to be utilized by 31st of July, but somehow Ashokji forgot, or he did not get time because of professional pressure and commitments, and he could not go to West Side. So the validity is over. Now what happens? Practically, West Side has earned that 2000 rupees because now they don't have to supply any goods against that because the validity is over. The question is, what would be the tax treatment of this 2000? And this was a pending question. Now it has been clarified that yes, West Side received 2000, but in GST the tax is not on money received, the tax is on supply. So it received money 2000, but what is the supply that West Side gave? The answer is there is no supply of goods or service on account of such unredeemed vouchers. Once there is no supply of goods or service, there can be no GST. Again, here they have given reference to the same 2022 circular. That can we say that here again there is some service of tolerating an act, etc. They said, please don't confuse with that. Anything, any money received cannot be said to be for forbearance or tolerating or an act. Simply, there is no GST on such amount. Why? Because yes, you received money, agreed. But if it is not redeemed, that is, nobody comes to buy the goods against that, your money is gone. West Side has that money, but since it has not supplied anything against that, there will be no GST. So very beautifully crafted circular. I really like the way they have clarified this. Now coming to another very important clarification and also very practical one. So let us first understand what the issue is. So the issue is you are an automobile dealer. So let us say you deal in Mercedes car. You are having your Mercedes showroom. Now I am the Mercedes OEM. That is where this car is being manufactured. So I am the Mercedes car manufacturer OEM. Now you place order for 20 Mercedes, which you expect that you can sell it in next 3 to 6 months because now festival seasons would be there. People would be buying such costly cars. Now, when you place order on me, let us say my manufacturing unit is in Haryana. You are sitting in Ahmedabad, Gujarat. So definitely these 20 vehicles have to be delivered to your place. Now, generally, it is found. Now, again, they have taken example of this car dealer, but again, the circular says that it is applicable to all similar cases where similar type of arrangement is there. What is the arrangement? I, as the Mercedes manufacturer, the OEM, has contracted with you saying that, boss, you have to take the delivery from my factory gate, which is called as X factory or X works delivery. So my contract is X works contract, whereby I say, boss, you come and take delivery at my factory gate. You said, fine, no problem. So you arrange your transporter. So you arrange some such long vehicles on which these cars are loaded. In one vehicle, there may be 5, 6 cars. Normally, it is not open, it is closed, but just you can understand that is why they have given an open example. But I'm sure you would have seen this long vehicles in which in 2 levels, these cars are loaded and they are transported. Now, the point is, the biggest or the most critical point is that technically the supply is concluded here itself. The delivery is concluded here itself. What is this? This is the factory gate of supplier, that is the OEM, that is the car manufacturer. So even though the distribution or the transportation will end here, but the delivery has ended here because the contract is X works contract. In X works, my delivery concludes at the factory gate itself. Now, in this particular case where the delivery concludes at the factory gate, the issue is when is the dealer eligible to get ITC? Now, why is this question relevant? I'll give you an example. Today is 30th of June. So let us say today I load these 20 vehicles in these trucks, and from my godown or from my factory, I have dispatched this. Now, please pay attention and understand this. Today, when I have dispatched this, so at my end, supply is over. Even the delivery is over because our contract says deliveries X works, X factory. So all this transportation and all is your headache. You have arranged for the transportation. So my role ends here on 30th June. But this transport will take 8 to 10 days. So you will physically receive these vehicles at your doorsteps in your showroom, let us say on 10th of July. Now, in which month you will get ITC? In the month of June, because today is the last day of June and today I have done this, or you will get this in July when you actually receive the cars. The answer which is given clarity in this circular is relating to this, because section 16(2)(b) requires one of the condition for getting ITCs, you should have received the goods. Now here the only question is, when will we say that you have received the goods? Now for this, the most important point is received should be by you, means the person is the criteria of receiving, the recipient is the criteria of receiving and not the place. It is not mentioned in 6(2)(b) that the good should have been received in your factory or in your godown or in your showroom. That is not the language. It says that the recipient should have received the goods. Now the question is when it will be said that you have received the goods. The circular clarifies that since it is a X works contract, my delivery is over at my factory gate, so you receive the goods at my factory gate itself. So 30th June is the date of receipt. So on the basis of this 16(2)(b) condition, you will be eligible to take the ITC today itself if all other conditions are satisfied, because the receipt has happened today. The moment you collect the goods from my factory gate through some transporter, from my side delivery is concluded, from your side receipt has happened. So this circular clarifies that you will be getting ITC. Obviously, it is then further clarified. The goods are found to be diverted for non-business purpose at any stage. Obviously, the ITC will be taken back. So instead of getting it to your showroom, if you are taking it to your house, then that is a different thing. No ITC is allowed. That is obvious. For this, we don't require this clarity. The clarity was mainly required was when it is said that the delivery is or the receipt is complete. The answer is on 30th June itself. Very important clarification, very important circular. Correct? Now, beyond this, all other circulars are very simple clarificatory circulars, except this one. This is again one very interesting and important circular. What is this circular saying? The circular is talking about time limit for raising invoice in case of RCM. Now, why RCM? Because it is saying the cases where recipient is required to issue invoice, and when recipient is required to issue invoice in RCM cases. So where I have ordered some goods or services from such a supplier who is unregistered, first condition. Second condition, my transaction is covered in 9.3 list, 9.4 list, which is the RCM list. In that particular case, the law says I have to make an invoice. This is given in 31(3)(f), which says that the recipient who is liable to pay tax under 9394 shall be also issuing the invoice. Correct? Now, the question was, this 31(3)(f) asked me to invoice, but it did not give the time limit in which I should raise this invoice. So there was some anomaly. It asked me to raise invoice in case of RCM transactions. Okay. But by when? It was not clarified. So we had this open-ended provision which said only, or which provided that I should raise invoice but without giving any timeline. So it was interpreted I can issue invoice till eternity anytime and it would be accepted. So to remove this anomaly, there was an amendment in this section which said that the invoice should be issued. That is, I should prepare the invoice within a time period which will be prescribed. Prescribed means by way of rules. Now that prescription is made by issuing Rule 47A. Rule 47 anyways is for invoice only. 47A adds to that. It says that I should have raised or made this invoice within maximum 30 days of the receipt of the said supply. So the moment I receive the supply, within 30 days of receiving the supply, I should be raising the invoice. So now this section has got a completeness, I will say, which was missing earlier. So now the section is giving me the timeline of 30 days to raise the invoice. Is this fine with all? Yes, students, clear?
Yes, sir.
No doubts? Anyone? Now,
Sir, it is for GTA services, na?
sir, it is for any goods or service which is under RCM. It is for RCM transactions.
No, it is only for GTA services RCM.
Why GTA service RCM?
Sir, it is mentioned here in red color letter. The said supply of goods.
Where it is mentioned? Tell me, show me.
Last line, sir. 47A. The said supply goods and services. Oh, I am reading it the wrong way, sir. Sorry, sir.
So it is already mentioned here. See, read here. Who is liable to pay tax under 9394? That is RCM. That's it. It can be any RCM, na?
Oh, not GTA only. Right, sir. Thank you, sir.
Now, this is the next amendment. Now, firstly, again, what this amendment is dealing with, let us understand. Now, I am an unregistered person, not registered under GST. Now, I have to send my goods from one place to another. Now, you all know e-way bill has a requirement where the amount limit is only 50,000. Now, since my turnover is below the registration limit, I have not registered, which is legally correct. No challenge in that. I need not register because my turnover is below the Section 22 registration limit. But my invoice consignment value exceeds 50,000, which makes me liable to issue or prepare an e-way bill. Or where I am transporting handicraft goods. Over there is no monetary limit. Even for 100 rupees handicraft goods, I have to raise e-way bill. So for this particular scenario where I am unregistered, but the e-way bill provision requires me to raise e-way bill either because my consignment value exceeds 50,000, which is the requirement for e-way bill, or because I am transporting the notified handicrafts for which e-way bill is compulsory without any monetary limit. In both these cases, the point is I should have raised the e-way bill. But now the question or the problem is I am an unregistered person. How can I raise the e-way bill? So for this already we have a provision in the portal which says that I should raise the e-way bill by registering myself on the e-way bill portal. I may not be registered in the GST portal. It is okay. There is a separate category. एक और क्लास हाँ ये मैं पी लेता हूँ एक और बना दूँ घर So I am required to register on the e-way bill portal. Now, how to do that? For that, a new proviso, fourth proviso is inserted in the e-waybill rule provisions, which is 138, which provides that following persons required to generate the e-waybill shall submit details electronically on the common portal in the prescribed form, and upon validation of details, a unique enrollment number shall be generated and communicated. So for them, this special procedure is now incorporated in the rule, that they will go on the portal and they will raise this unique number. So this is what is the simple clarity, nothing very specific. It simply says that even an unregistered person can now do this by going to the portal, uploading the details on the e-waybill portal, and they will be allotted a unique enrollment number, which will be the criterion for the e-waybill provision. So once you get this, your e-waybill will be satisfied.
Sir, there is a doubt, sir. Actually, who need a waybill actually?
Why this is a doubt, beta? Because the rules are very clear. The moment you transport the goods by road using a motorized vehicle.
Yes. What is the distance?
Sir, there is no distance limit. Even if you are crossing the lane, that itself will require e-waybill. Condition is one, the value should exceed the limit, which is 50,000 for interstate. And within the state-wise limits are different. Somewhere it is 50, somewhere it is 1 lakh, somewhere it is 2 lakh. So for the timing, we are taking 50,000, right? And the second is the transportation is by road, by a motorized transport vehicle.
There are so many cells in nearby shops also. They are not generating any e-waybill, and there are lots of invoices in within a town not generating any e-waybill.
See, I'll tell you something very interesting.
Practically, nobody is raising e-waybill, sir.
Hear me out. Hear me out. I was watching this movie Kesari 2, right? In that, this dialogue came across, and I really found it very relevant. What it said: what is the definition of law? Law is something which is always broken. Unfortunate. I really like that sentence. I may not be repeating the sentence exactly, but that is what somewhere near this whole sentence or dialogue is there, which says that what is law? Law is something which is broken always. That is what is law, which is broken. So now answering you straight, see, beta, we are understanding, we are reading what the law requires you to do. Whether people are practically doing or not, that will not decide what the law is. Now, law is this. People are not doing, that is their mistake. Tomorrow, whenever the authority catches them, they will have to pay penalty. So they are not doing that, does not mean that is not the law, na?
So somebody is transporting their goods in a rickshaw, though how can e-waybill? There is no number, na, sir.
Which why rickshaw does not have a number?
No, rickshaw doesn't have a number, sir. I never know that.
Rickshaw has a number, na?
Rickshaw has a number.
Yeah, there is a registration number of rickshaw.
Okay.
Why? No registration number is there in your state of rickshaws?
No.
There
No,
is.
I'm not talking about auto rickshaw. The rickshaw, manual rickshaw. Hand rickshaw.
Correct. So, beta, I already mentioned, that is why I said first understand the provision. There are two requirements. One, value. Two, it should be transferred by motorized transport. I use this word.
Okay, motorized.
So it is not motorized. So no e-waybill. If you are carrying the goods on head, if you are carrying the goods by that hand-driven thela gadi, or you are using some bullock cart, or you are using some hand rickshaw, no e-waybill required. Irrespective, you may be carrying crores of rupees of goods. No e-waybill.
Okay, sir. Sir, there are also practical cases that in between two businessmen, there are thousands of selling or purchasing during a month, and at last they are raising one invoice at the end of the month. That invoice may be of 10 lakh or 50 lakh, but there are individual transactions consist of 20,000, 5,000, 10,000.
No e-waybill. See,
no waybill.
e-waybill is for every movement.
every moment.
So one movement
At
consignment
last,
value.
sir, at last, at the end of the month, they're raising one invoice. That invoice is above 50 lakh.
See, for e-way bill, invoice is not the only document. It may be even delivery challan. Now the first question is, when you sent your first, let us say today, I sent goods of 12,000. How will I send? Again, the law has made a requirement that if it is not a supply today, or if it is part of some continuous supply, means I don't have to raise invoice today. In short, first, then I have to raise this delivery challan. So either delivery challan or invoice, one thing has to be raised. Now people don't raise it. That is a different point, which is breach of law again. That is their mistake. Are you getting my point?
Yes, sir. But what are the consequences if e-way bill not generated?
See, simple. You have to pay the penalty, which is for breach of law, which is 25,000 per act.
Per act.
So it is 50,000 C plus S. Correct?
Yes, sir.
See, again, we should be able to distinguish between this. One, what we are seeing practically, and one, what law requires you to do. Like a simple example, when you are driving vehicle on the road, there are so many regulations relating to a road, that is what you can say RTO. Many people are not following. They're driving on the wrong side. They're taking the vehicle in no entry lanes. They are parking it on the wrong side where there is no parking. They are over speeding. In the basic thing is there, when you have to stop at a signal, they first either they are not stopping at the signal or they are stopping their vehicle beyond that line. You should stop the vehicle before that zebra crossing line.
Yes.
People are taking it. In fact, that itself is a breach, but everybody is doing. So that does not mean that that is correct. No, that is wrong. So that is what is the point to be kept in mind. Fine.
Yes, sir.
Yes. Anybody else is having any questions on this? No questions? Perfect. Now, all these further amendments are more of a clarificatory amendment. Now, what is this? Why I'm saying these are clarificatory? So we have section 73 and 74 for issuing show cause notice. Not we have, I should say we had. From financial year 24-25 onwards, the law says that if any notice has to be issued for any financial year from 24-25 onwards, you will be issuing it under the newly introduced section, which is 74A. So a new section has been brought in for issuing show cause notice for financial years 24-25 onwards. So now we are already in this new era of 74A. Now, till date, even 73-74 is applicable because for all notices for periods before 24-25, you still use 73-74 and still the time limit of 18-19 is still yet to be completed. So from 18-19, all notices are still due. So today, parallelly 73-74 and even 74A, all three are applicable. Fine. Now the main point. The main point is there are different rules, there are different provisions in the Act. Like here they gave example of 88B, where in the provision is referring to 73-74, but they forgot to include 74A. Not forgot, or I'm using the wrong word. Because originally 74A was not there. So in the originally drafted rule, they are referring in the rule to 73-74. Now, after introduction of 74A, the simple amendment is wherever 73-74 is given, this further part is added or 74A. Or 74A. So now everywhere, like in 88B you saw, similarly here you will find the same thing. Sorry, not this one. There is one more rule. Yes, 88D. I'll come back to the previous one. In 88D also, what they are saying that for all periods pertaining to 24-25 onwards, now you have the new section. So wherever in the rule, the reference of 73, 74 is there, in that you'll add 74A also. So some amendments are simple, this type of amendment where because of amendment in some other section, they have to simply add or delete that word. So that is not very significant. Now coming to this amendment, which is again important, it is relating to GSTR 7. Now what is GSTR 7? It is a TDS return. So let us say I am a person who is required to do TDS. Mainly it is the government who is required to do TDS as per the provisions of section 51. What the TDS provision or the TDS requirement is that I have section 39.3, which requires that the registered person who is deducting TDS under 51 has to furnish a return in the prescribed form, which is GSTR 7, and this has to be done electronically. Everything is electronic for the month in which such deduction has been made within 10 days after the end of the month. So this is the original provision. Now, what has changed? The Finance Act 2 of 2024, which came into effect on 1st November 24, what it said, mandated the electronic furnishing of return for each month by the registered person who is required to deduct TDS, irrespective of whether any deduction has been made in the said month or not. Means what? Earlier returns were ki only in the month when you have deduction, you have to file return. Now the amendment is every month you file return, even where there is no deduction, still you file return. Fine. It also empowers the government to prescribe by rules the form, manner, time in which such return has to be filed. Therefore, earlier filing of monthly form GSTR 1 was linked to calendar month in which tax has been deducted. However, amended 39.3 mandates furnishing of GSTR 1 for each month, irrespective of whether any deduction has been made in the month or not. So the amendment is, original section required you to file GSTR 7 only if you deducted TDS. So it means if there is no TDS in a month, no need to file 7. Now the new amended provision says you file 7 every month. So where there is no deduction, you'll file nil, but you have to file nil. Now, further, the new section provides that the time within which 7 is to be filed shall also be prescribed by rules. Consequently, simultaneously with effect from this date, Rule 66.1 has been amended to prescribe the time within which 7 has to be filed. Amended 39.3 provides as follows. Every person required to deduct TDS under 51 shall electronically furnish a return for every calendar month of the deductions made during the month in such form, manner, and within such time as may be prescribed, provided that said registered person shall furnish a return for every month, whether or not any deduction have been made during the said month. Amended rule provides every registered person required to deduct TDS under 51 shall furnish a return in GSTR 7, okay, on or before 10th day of the month succeeding the calendar month, electronically through the common portal, either directly solicited. In short, the basic point is, the amendment is, you have to file return every month, point number 1, and this should be filed on or before the 10th day of the next month. So for this June month, you have to file it by 10th of July. But now it has to be filed irrespective of whether or not you have any TDS in that period. Again, in case of refund section, again in Rule 96B, same amendment, that wherever in the rule the reference of 73, 74 is there, you will also say 74A. So 74A has been added in this particular rule also. Now coming to the customs part, there is no major or specific change. Now there is one very specific rule. What this rule heading is, customs import of goods at concessional rate of duty for specified end use. So we call it as the end use exemption rule. Now what this rule has, CBI has amended this rule, hereinafter referred to as said rules. Amendment in Rule 3, that is definition. First amendment is they have introduced the definition of quarter. Now we all know what is quarter. Quarter is a period of 3 consecutive calendar months which ends either in March or in June or in September or in December. So nothing very great in this. So firstly, they did not have the definition of a quarter, so they have included. Now, further, they amended rules 6 to 10. What amendment they did? The salient features of the rules are discussed here under. So, importer to maintain records. Now, simply, what is this point? You are importing goods. and you are importing goods for a specific end use. I'll give you an example. So let us say end use is research in ISRO. So now ISRO is doing some research, or let us say ISRO is going to launch a satellite, the lunar satellite. Now for that, there are certain parts which have to be imported, which will be ultimately used in making that lunar, I forgot the name, some vehicle, LSV vehicle, something, right? Now, for making that satellite, that LSV, you require certain specific motors, certain parts, certain asbestos sheets, which are not there in India. So you importing it from Russia, from China, from different places. Now, if anybody imports those materials, they are liable to customs. However, because of these rules, where you are importing it for a specific end use, which is ISRO's launch, and government wants to make it cost effective, so they are saying because these goods are imported for this end use, we will give them concession or we will exempt them. That is what is this whole rule dealing with. Now for this, they have brought some amendments. First amendment is in Rule 6. What is the amendment, or sorry, what is Rule 6 dealing with? It deals with the requirement to maintain records. Now in this, what they are simply saying, the importer has to maintain record of the quantity of the goods imported, quantity and date of the receipt of goods imported in the relevant premises. Here relevant premises would be, let us say, ISRO, or the place where the ISRO's LSV is being manufactured. Then quantity consumed in that particular end use. Then quantity of goods sent for job work for that particular purpose. Then out of that quantity sent, what is received back. Then quantity of goods re-exported because they were in excess. So for all this, you have to maintain proper records. And main part is this. So actually above part was already there. Main part is this, that for this now you have to submit a quarterly report. And that is where they brought in the definition of quarter also. So earlier this reporting part wasn't there. Now they have introduced this reporting part. So even in Rule 7, where now you are sending these imported goods for some job work. See, everything I will not be doing. So I imported the asbestos sheet, which will be ultimately used for my LV vehicle. But before that, some treatment has to be done on those asbestos sheet, for which I am sending it to job work. Again, for that, I have to maintain proper records, and again, I have to file quarterly statements. Further, the maximum period for which the goods can be sent to job worker is 1 year. Now, this is parallel to GST. In GST also, when you are sending goods to job work, you should get it back within 1 year. Similar point. Then, procedure for allowing imported goods for unit transfer. Now, it may happen that I myself have multiple units. Now, my unit A has imported, but further work has to be done by B, C, and then it will go to finally ISRO after being completed. Now, I may transfer the goods from one unit to another. Again, I have to maintain records and file quarterly statements. So basically, you will find that all these amended rules are now basically requiring you to maintain records and to exercise control that these goods, since I have allowed you to import it either at concessional rate or exemption, you should not misuse it or not use it for any other purpose which is not mentioned. Hence, they have put in these conditions of reporting. That is what is the basic provision. Fine. So nothing major, only the reporting aspect has been added. Now, in foreign trade also, they have not made any specific amendment or not anything which is considerable. What it says, trade facilitation measures introduced with an option available to the central government for consultation with relevant stakeholders to seek their views, and also providing the mechanism on best endeavor basis to inform reasons for not accepting the views. So in short, whenever the government is formulating this foreign trade policy, now the amendment says you should first invite inputs from all the stakeholders. Now, majorly the stakeholders are all industry. So you should take their inputs, you should take their views. And for this, you should provide a mechanism. So in short, you should develop some portal or something where people can come and give their views first. Second, if you are not accepting their views, you should give them the reason why their views are not accepted. So when you are taking views, and let us say big companies are coming with the views, definitely they will come up with a lot of statistics with data. So if you're not accepting their views, means it is, if it is not getting included in foreign trade policy, you should give them the reason. So for this, some amendments have been brought in para 1.07a 7b. So they introduce these paras where the first para says you should do consultation with stakeholders. So they have provided the entire mechanism how this consultation should be done. So they are saying you should provide minimum 30-day period to them to get comments. So let us say you want to make some amendment. So before you make an amendment, give them 30 days so that they can give you their inputs and feedbacks. So you should take the views, suggestions, comments, or feedbacks. However, central government is not obliged or mandated to disclose the reasons for not incorporating. When? Now see, firstly we said that you should disclose. The first part is you have to disclose the reasons, but then it has given exceptions that you need not disclose when it has the potential or will adversely affect the trade relations with any foreign country. So this is important. So you are not incorporating their views, that is okay. But the point said that you should give them the reasons. But there is an exception when you need not give them the reasons why their views were not considered, when doing this can affect relations with some other country or would adversely affect food, economic, or national security. So when these are the causes because of which you have not incorporated their views, you need not give them the reasons because these are sufficient reasons for not incorporating the views. So if by incorporating the views, any of these problems could have happened and hence you have not incorporated, they say no problem, no need to give them the reason. So first reason is it could adversely affect relation with other country. Second, it could affect the food, economic, or security of India, or it is in conflict with any government policy or strategic programs or international obligations, commitment, etc., or it addresses matters unrelated to trade. So where the matter is not at all related to trade, the chapter is closed, or it serve narrow private or special interest to the detriment or contrary to the broader public interest. So it is only for your personal interest you wanted this, but in public interest it is not good. Again, I have not accepted and I need not give reason. Would require the disclosure of confidential or classified information. See, many times, many things in government never come to public. Like we had this plane crash. Till date, we are not yet knowing the cause. There could be a cause, but it may not be in public interest to disclose it. So there are so many events that happens, like the recently concluded war between Iran and Israel. Nobody knows what happened, who won, whose interests were served. Both are celebrating. US is also taking the credit. So there are so many things for which the actual reasons are not disclosed to the public, and it is correct also. I'm not alleging anything on any of these countries. It may be in the overall interest of the countries, their citizens, and even the world that people don't come to know these classified information. So where informing you the reason would lead to disclosure of classified information which is not correct, I may not disclose the reason. Further, no legal right shall be conferred on any person to seek reasons for his views, comments, or anything not being incorporated. So, government is given that obligation that you inform them, but they do not have the right. Means what? They cannot go tomorrow and file case and ask for why their feedback was not incorporated. So, in customs and FTP, there is no significant as such change which affects you or your preparation. Major changes are all in GST. So with this, we have completed everything in our syllabus, and this is our concluding session. So I again wish you all the very best, and please study well, study in a disciplined manner, and I assure
Thank
you, you will have the
thank
best
you,
of
sir.
the results.
Okay, sir. Thank you, sir.
Thank you,
Most
sir.
welcome. Most welcome. Fine. That's it all from today.
Sir,
Thank you, sir.
so my
Yes.
query is that if there is any query or any issue, then how we communicate?
See, I think we have this facility. You can always connect to BOS. You should post your queries or issues to BOS and it will be resolved.
At which place, sir? POS at which
Ashok ji, where they can post their queries?
Sir, there is a mail ID.
Hmm.
Can you can reply that? If we mail anything,
I think Ashok ji will Ashok ji, you can put the mail ID or what is the mechanism?
Yeah, mail ID is final ITT. So there is a practical doubt. Can I ask that?
Yeah, please.
देखिए सर, मैं हिंदी में बोलता हूँ.
हाँ बोलिए.
एक ये जो ड्रग इंस्पेक्टर होते हैं ना, वो तो गवर्नमेंट के ही होते हैं. वो GSTR 7 ही फाइल कर रहे हैं, तो उनका GSTR 7 अभी मंथली हो चुका है. हेलो, मंथली हो चुका है. तो वो क्या किया है, ट्रैवल एजेंसी से अपने ऑफिस के लिए 2-3 व्हीकल जैसे कार वगैरह वो रेंट वगैरह दे के लेते हैं. मंथली बेसिस पे रेंट पेमेंट करते हैं. मान लीजिए रेंट 30,000 और 40,000 ऐसा होता है. अब क्या है, उसका बिल रेज कर रहा था वो ट्रांसपोर्ट एजेंसी और वो ट्रैवल एजेंसी वाला जिसके पास कार था. वो पेट्रोल भी देता है या डीजल भी देता है. अब डीजल का दाम मान लीजिए 25,000 हो गया और उसका जो मंथली रेंट है वो 30,000 हो गया. अब क्या हो रहा था कि जब वो बिल रेज कर रहा था तब उस पे क्या जीएसटी लगाना चाहिए उसे. अभी जीएसटी है 12% वाला है, 5% वाला है, और इंक्लूडिंग डीजल पेट्रोकेमिकल्स के ऊपर मिला के रेंटल और पेट्रोल के मिला के 5% का जीएसटी उस पर लगना चाहिए. 12.5 का भी कुछ है, ऐसा रेट है.
See, there are only 3 rates, 5, 12 and 18. हाँ. और the rate applicable to the vehicle. इसमें सबसे important ये होता है, आपको ये देखना है कि actual nature of supply क्या है. 5% कब लगता है? When it is passenger transport service. Correct? So GST में nature of supply बहुत important है. Correct? So we have to check what is the actual nature of supply. ये आपको contract पे से पता चलता है.
कॉन्ट्रैक्ट पे ये लिखा है कि ड्राइवर के साथ गाड़ी और पेट्रोल दिया जाएगा.
नहीं, इतना काफी नहीं रहता है. उसमें ये चेक करना पड़ता है कि फिक्स रूट है कि किसका.
फिक्स रूट नहीं, ऑफिसर जहां भी जाएगा ना गाड़ी लेके घूमने जाएगा.
हाँ, सो दैट इज जनरली पैसेंजर ट्रांसपोर्ट सर्विस.
हाँ ठीक है. तो इस पे कितना रेट लगना चाहिए?
5% लगना चाहिए.
5% लगना चाहिए. हाँ. yes. तो जब एक्चुअली बिल जब जनरेट होता है, अभी कैसे होता है उनका, वो पेट्रोल को अलग कर देते हैं बिकॉज पेट्रोकेमिकल्स इज नॉन जीएसटी सप्लाई. तो मान लीजिए
दैट इज रॉन्ग, दैट इज नॉट एज पर द लॉ.
सर
वो गलत कर रहे हैं. सी दैट्स व्हाई आई एम सेइंग अगेन, प्रैक्टिकली लोग बहुत कुछ कर रहे हैं. दैट मे नॉट ऑलवेज बी इन लाइन विद द लॉ. इसे मैंने कहा कि पहले आपको ये देखना है.
नहीं सर, सुनिए सर, अभी क्या है, उनके पास कोई जीएसटी का ऐसा सर्कुलर भी आया है जिसमें लिखा है 18% सिर्फ मंथली रेंट पे आपको देना है और पेट्रोल पे कुछ नहीं देना है जीएसटी.
Exactly, that is correct, but that is why I asked the first question, what is the nature of supply. इसलिए मैंने आपको कहा 3 रेट्स है, 5, 12, 18 तीनों रेट्स है. पर ये डिपेंड करता है कि वो रेंटिंग सर्विस है. रेंटिंग है तो उनकी बात बराबर है, फिर हम पेट्रोल इंक्लूड नहीं करेंगे. बट दैट इज वेयर द कॉन्ट्रैक्ट बिकम इम्पोर्टेंट. लोग क्या कर रहे हैं, दे आर रीडिंग द लॉ एज पर देयर कन्वीनियंस. तो जो प्रोविजन उनको कन्वीनियंट लगती है कि भाई टैक्स कम भरना पड़े या मुझे नहीं भरना पड़े, वो उस प्रोविजन से लॉ को पढ़ते हैं. अच्छा. कि यहाँ पे अगर मुझे लगता है कि पेट्रोल हटा के बाकी रेंट कम आ रहा है, उसका 18% मेरे को ज्यादा सही लग रहा है, तो मैं उस तरीके से लॉ का वो सर्कुलर लेके टैक्स भर रहा हूँ. और अगर मुझे लगता है नहीं पूरे वैल्यू पे 5% वाला बेटर है, तो मैं वो कर रहा हूँ. पर ये दिस इज व्हाट आई एम ट्राइंग टू से, दिस इज वेयर पीपल आर डूइंग इट इनकरेक्टली. आई एम नॉट सेइंग कि वो 12% या 18% गलत ही होगा, बट उनका ये जो अप्रोच है वो गलत है. इसलिए जब भी हम किसी को भी एडवाइस करते हैं, वी फर्स्ट रीड द डॉक्यूमेंट अवरसेल्फ, क्योंकि डॉक्यूमेंट में बहुत सारी चीजें देखनी पड़ती है एंड दैट डिसाइड्स व्हाट इज द एक्चुअल नेचर. सो ये जो अगर 18% करे वो पूरी तरह से गलत नहीं, लॉ में वो भी है, पर वो कब होगा जब आप ये प्रूव कर सकते कि वो रेंटिंग ऑफ व्हीकल सर्विस है.
अच्छा.
देयर आर डिफरेंट, इसलिए मैंने आपको स्टार्टिंग में कहा देयर आर डिफरेंट रेट्स and in the same transaction it can be different supplies, so you have to check the actual nature of supplies. Fine.
Okay sir, thank you sir.
Yes, so thank you all. Thank you very much and wish you all the very, very best of luck.
Sir,
Namaste.
mail ID.
Sorry?
Sir, communication mail ID. I haven't get that.
अशोक जी आप बता देंगे प्लीज. अच्छा, नेहा कैन यू जस्ट कनेक्ट टू अजीत जी. आई थिंक आपका
We
कोई
have
व्हाट्सएप
a
ग्रुप है,
group of, yes sir, we have a
उसमें शायद
final
अजीत
group.
जी होंगे. यस, अजीत जी होंगे उसमें. आप वहां पे उनसे पर्सनली व्हाट्सएप पे पूछ लीजिए.
Okay sir, done sir.
Yeah.
Thank you.
थैंक यू. गुड नाइट एवरीवन. गुड नाइट अशोक जी. यस सर, डन सर.
Namaste, sir. Namaste, sir.